participants come here to review,
We can.
All the time. I'm not sure exactly. Well down.
And then like DC, like it is like
See each other every year on this ground.
Oh my God. Very clear.
Basically have everybody else.
Yeah.
So, maybe John. We have our own resolution.
And it's very
Oh, yes, exactly.
You live in a good area? Good. Good. Really good. 12 minutes. Yeah, ready to go.
It's not a friendly video.
All right, good morning, everyone. If I can have your attention, we're gonna get started shortly. My name is Farah Narkowitz. I am with the Stephen D. Cutler Center for Investment and Finance over at Boston College. We've been involved with Boston FinTech Week since 2018, so this is very exciting. Babson is obviously known for entrepreneurship, but we do have a large group of students and alums that are focused on finance. And so for us, Boston FinTech Week is the perfect week where finance and entrepreneurship sort of collide and come together. So I've been fortunate enough to sit in on a lot of sessions this week, and it seems like no matter what the session is, someone's talking about AI. So I feel like this is the perfect time to end the week, sort of wrap it up and talk AI investing. So I am going to toss it over to Shri. He will introduce our panel. We're going to do just some logistics. We're going to do an hour discussion, and then we'll go right into a 90-minute master class. So get yourself comfortable. Please feel free, help yourself to the food in the back. Restrooms are located down at the end of the hall. If you need anything, I'll hopefully be hanging out in that back corner. But thank you all so much for coming out. And Shri,
Thank you so much, Farah. Thank you all for joining us. It's always a pleasure to host this workshop. We've been doing it since the inception of to FinTech Sandbox. Every year we come back and we host a session primarily to get the community. We have investors, we have startups, we have people who are working on various FinTech ideas in a large enterprise setting. And I wanted to kind of, bring everybody together and see if we could have a discussion focused on the topic of the day, which is AI. Everybody is talking about AI. So we have kind of chosen three themes: opportunities, adoption, and expansion. And we have a fabulous panel today who are going to be kicking off the session and sharing their ideas and thoughts. But before I get started, I really wanted to appreciate the support of Babson College. They've been very generous in making these facilities available to us and host this workshop, and also for the FinTech Sandbox. They did a fabulous job this week, bringing the whole community together and hosting all the sessions. And all the ideas and the discussions we've been having the last week have just been phenomenal. I'm getting so many ideas, and I'm going to get my development team, who are Trace and Urwar here, so they're going to be tanking some of those ideas and see if we can operationalize it on it. So without further ado, we're going to, a couple of logistics. We have a lot of people dialed in over Zoom. And this session is also being streamed on LinkedIn Live and on YouTube, and it's going to be recorded. And we're going to share those slides, which we're going to present later. And if you have any questions for the panel, please hold off in the last 5 to 10 minutes. Please raise your hands, and that way we can make sure that the questions get addressed. And also, if you want to take notes, all the things we are going to be talking about is primarily in a public mode. But if you are, talking about something, please use discretion, because this session is going to be live streamed. So without further ado, thank you so much for joining us today. So we have, John Werner from Link Ventures, John Harthorne from Lantus VC, Anish from Fidelity, Arun Verma from Bloomberg, and Dee. Instead of me introducing every one of them, I'm just going to give them an opportunity to talk a little bit about what their role is in their organization, and also in the aspect of AI, what do they think about AI? So John, want to get started?
Sure. John Werner from Link Ventures. We have a $130 million fund that we're investing in AI. We're right next to the Draper Lab. And a little known fact, Charles Stark Draper, that was the inspiration for Tony Stark. When Stan Lee was trying to name Iron Man, he said, "Oh, let's name it after someone really awesome." And so we're right next to MIT, next to the Draper Lab. Two companies in our portfolio that we invest in, Farsight and Dataline. I'm wearing the jacket. Are two companies that could be interesting to you if you think about the journey that you all are on. Farsight, 3 guys out of MIT, they pivoted like 3 times, but now they're giving AI superpowers to investment analysts. And then Dataline is giving AI superpowers to people who are helping people with FinTech investing, with wealth managers to help them kind of understand what's going on. This room is a little deja vu. This used to be Bingham & McCutcheon. Has anyone heard of Bingham & McCutcheon? Yeah, so it's a law firm that doesn't exist anymore. But in 2001, I got 20% of the 8th graders in the Boston Public Schools, and I brought them to South Station every other Tuesday. Because what I found was I was getting lawyers to teach mock trials in the federal courthouse, but most lawyers said, "I don't know anything about mock trials. I don't want to volunteer." So I said, well, let me bring these 8th graders to this law firm and 11 others and have them be writing coaches every other Tuesday. And at the end of the year, we had the 8th graders and the lawyers publish a magazine. I was able to get lawyers involved who weren't doing mock trials, and it was pretty amazing. And the reason I bring that up is today, you don't need to bring a student here to work with a lawyer that could charge $500 an hour. With AI, these young people are going to have that access. And the whole legal system is in for a whole business model change. And if you all are entrepreneurs, understanding that the status quo is changing very much. And there's some people that are going to just throw up their arms saying, "I don't know what to do right now." And then there are other people that are going to be the bridge between what was and what is. And then there's going to be a bunch of people that are going to say, "I'm going to lead right now." And in FinTech, with AI, there are so many opportunities. And I love supporting people like that. I don't know if I went too long, but was that?
No, well, it's perfect, John. And John is also he's kind of launched a flywheel in the Boston area for the AI ecosystem. So he's involved with multiple projects at TEDx Boston and also at MIT. So I always look forward to this session, Mr. John Holmes. Thank you so much, John, for joining us. John?
All right, I am also John, so keep that nice and easy. You guys all have to change your name to John. So I'm John Harthorne. I'm the founder and managing director of a fund called Two Lanterns Venture Capital. We are a software-only fund and invest at the seed stage in the US and Israel, otherwise industry agnostic. So we're not FinTech specific, but we do invest in FinTech. We've had a couple of great startups in the FinTech space. And on the AI front, we're software only, so there's a lot of AI. I think all but 2 of our 36 investments in Fund 1 leverage AI in a very significant way, more than half of those as the core technology that they are implementing. I think there's enormous opportunities within FinTech and otherwise, and super excited to see the industry develop. Prior to launching Two Lanterns in 2020, I was the founder and longtime CEO of Mass Challenge. So I ran Mass Challenge for a decade and saw about 3,000 startups graduate from there. We launched 10 plus programs in, 5 countries and in 9 cities around the world. And that is ongoing and doing really well and has a specific FinTech program. And through that, we've had a lot of exposure to FinTech technology and innovation, and very happy to share my thoughts with the rest of the panel.
Yeah, thank you so much, John. And John basically seeded the entrepreneurial ecosystem in the Boston area 10, 15 years ago. And QuantUniversity actually came out of the Mass Challenge program 10 years ago, and we did the Mass Challenge program in 2012. And it's kind of just great networks. And we are seeding our second startup at the Mass Challenge Festival. So I'm really fortunate to be in the Mass Challenge ecosystem. Thank you so much, John. So, and then we have Arun from Bloomberg.
Hi, good morning, everyone. Very happy to be here. So I lead a group of quant researchers at Bloomberg. And we are within the CTO office of Bloomberg with the demand areas, innovation, incubation, thought leadership. So we do a lot of activities around kind of marrying the discipline of quant finance, the traditional quant finance with the new AI and machine learning. And as you guys know, it's getting more and more sort of multimodal, more complex. So we work with all kinds of newer data sets as well, because it's called alternative data. It stays alternative for about a month and then it becomes regular. But we're always ingesting new types of data sets, building new models for our Bloomberg clients, and always putting out our research also more sort of on an open platform as well. So we do publish not just the code open source, but also our research and publications. Yeah, that's it.
Yeah, thank you so much, Arun. And Arun is joining us from New York. I have the fortune of knowing Arun for more than a decade now. I was a quant back in the day at Citigroup and did a lot of quant modeling. So we have a lot of modeling aspects in common, but I was looking at Arun's slides, and that's a masterclass, probably 3 hours long. And I would love to be a student in that masterclass, but he's going to do a preview of the session after the panel, and he's going to talk about some of the things that we're doing at Bloomberg. Thank you so much, Arun. Anish?
My name is Anish Shah, and I first have to say that anything I say these are my own views and not the views of any organization. And if you ask me about anything I do at work, then I'm going to say I grew up middle class. I can't say anything about what I do at work. I'm a researcher in a systematic quant team at Fidelity, and so we manage some active ETFs and also tax managed portfolios. So prior to that, I was at a tax managed investment firm, and then at a hedge fund, and then a vendor, and then an institutional brokerage. Way back, I was at the patent theory group at Brown, which is, at the time, this would be what becomes AI right now. And I've also taught a deep learning course there. So I've had my hand in that area for now several decades.
Thank you so much, Anish. And Anish is an accomplished Spanish acoustic guitar player, and his latest acquisition is a guitar he made himself in Spain. And I thought you were going to bring it to today, but maybe the next time you should definitely bring your guitar.
So I'll say this to anyone who's thinking about guitar making, if they have a math background, it's probably not a good idea because mathematicians love abstraction. And this is intense precision. So I think several times I was running a fever at 106 while I was doing it.
Thank you so much.
Do we actually need this?
Yeah, I think.
Can you guys hear me in the back?
I think it's for the video.
Oh, it's for the video.
Slide.
Okay, great, thanks, John. Hey, guys, so my name is D, full name is Dushyant, for those that have a trouble pronouncing my name, I just go by D, so. I co-lead our investment banking efforts, my firm's called Rosenblatt Securities, not my firm, I work for the firm. So we are the largest floor broker on the New York Stock Exchange by volume. We're also, the employer of the only woman that works on the New York Stock Exchange floor, which frankly is quite shocking, there's only one woman on the floor, there are about 390 traders. But the only female trader works for us, but that's just on the side. But I lead our investment banking efforts, so my day job is to raise capital for private companies. Usually we tend to do that between a Series A and a Series D. Some of the transactions we've worked on the last couple of years are much smaller, you may not be aware of, but in the public markets, we were a tier one banker on the Robinhood IPO, we were in the SoFi deal, so we have FinTech specialists. And frankly, the AI space, I mean, I've known about AI and ML for 10, 15 years, but holy shit, what just happened the last year and a half, right? I mean, 2 years ago, we were not deeply engaged. There weren't that many deals being done. And suddenly this stuff is just, like our CEO is like, what were you guys doing? Why weren't we on this thing 2 years ago? So it's not like, I'd love to hear from the panel, like what's changed over the last 2 years, right? Of course, you've got massive companies with, $1 billion valuations suddenly emerging in the public markets. But I'd love to see that, how much of this is real from an investor standpoint, from a practitioner standpoint. My perspective is most about, I can talk about what's happening in the public markets around AI and the private market, where is money going, seed stage, mid stage, late stage, and particularly what is happening with AI in financial services, right? Because a lot of the stuff happening tends to be horizontal AI, but there's some very interesting vertical applications that are emerging as well.
Absolutely, and I call D the human computer because any data point, he has it in his brain. He doesn't have to look up.
It's all written up here.
He has a lot of research, background too in the context of technology research and industry research. So I always have, whenever I have discussions with D, I just come out with so many more data points. And thank you so much again, D. So let's get going. I mean, when you think about the ecosystem, the FinTech ecosystem, which is also evolving parallelly to the technology stack and all the other opportunities out there. For early stage FinTech startups, I want to kind of, bring this question to John and John. What do you think an early stage FinTech startup should be thinking if they are trying to build an AI first startup? If they want to bring in AI as the key engine for what they are trying to do. And if you are a FinTech startup, what should you be thinking about? And what do you look for in the context of due diligence and in terms of growth opportunities? How do you kind of evaluate that opportunity?
All right, I'll kick it off because I got the mic and I'll hand it over. So I think first of all, you got to think of all of the same issues that you would think of in any startup at the early stage. And at the pre-seed and seed stage level, what we look for is almost entirely about the quality of the team. And that is sort of grit, ambition, resilience, and then specific kind of capabilities and skill sets within the given field, a breadth of coverage across the team. So all of that, I'm just going to assume is a background. That's given that you have to have all of that. Then I think unique within the FinTech space or in many of these, it's a heavily regulated environment. So you need to have some regulatory expertise and a plan for how you're going to align your technology and your strategy with the regulatory climate. I think with all AI startups, you would love to have some access to proprietary data source and an understanding of how to clean and leverage a large amount of data to train the model and then how you're going to access it and integrate it into the model over time. If any startup that wants to scale, to become a big success, you have to have a plan for scalability. It can't be all done, on one machine in one localized place. You have to be anticipating a lot of data coming in from a lot of different sources, and then being able to grow very rapidly once you hit that product market fit and it starts to take off. And then I think another element, especially within FinTech, within all of AI, but especially within FinTech, is to make sure that you have sort of an ethical model. You're anticipating ethical models. I think all of these models are typically trained on data, which is then mostly historic data. And that historic data does not necessarily reflect proper ethical behavior among all of the firms. And you don't want to simply replicate the past moving forward. So I think those are a number of the things. And then ultimately your success will be driven by hitting that product market fit, finding the right partners, growing really quickly, building a product that people need, having a great UI, UX, all of the other stuff that you would want to see in any startup. See what I missed over here.
Yeah, no, all excellent points. A few that I would add is, when companies pitch us, we ask ourselves, if you took AI out of it, are they just adding AI as the flavor of the month? Make sure that that AI is core to its success. We also want to make sure that there's someone technical on the co-founding team, that's not being outsourced. I found Babson alumni tenacious, so love having Babson. I know I'm in a Babson, so. I also think, AI is, the industrial revolution, a lot of things came out of that AI revolution. It's changing so fast. So you want to find a team that can adapt and adjust to the moment and what's coming. Another thing I would add is Fred Wilson. Anyone familiar with Fred Wilson and that framework? There's a lot of great best practices that he's come up with that we draw upon as a filter, as a litmus test, as a way to kind of evaluate pitches.
Thank you so much, John. So let's kind of now go from opportunities to adoption. I know Arun has a lot of data, and with the power of Bloomberg and the ecosystem out there, you probably have a lot of experiments you've been running in your test kitchens, if you will. So, maybe, Arun, you can start out by saying, enterprise adoption, what you're seeing in the customer space, and also internally, how you're thinking about, adopting AI. And I know, Anish, you're being given multiple duct tapes and band-aids and you can't express anything, but you can talk in generality about what do you think?
I have an explosive vest on, right?
You can share your opinions about it, please.
Yeah, thanks for that question. Well, first of all, let me give a nod to Dee's question about what really happened in the past couple of years. I think it's really an inflection point where the models, and technology is really mature with the more and more data and more compute power. But I think the innovation in the modeling space is still yet to come, I believe, actually. Their models are still more stochastic patterns, as they say. If they really learn very well from patterns that are within the data, they may not generalize very well outside. So that's why we have this hallucination with other things. But with the advent of newer sort of innovations in the space, where we have abstraction and reasoning also built into large language modeling, those are the capabilities that these large language models don't have. To be able to do logical reasoning or abstraction, that's really the next wave. But this has been a landmark here because AI got 2 Nobel Prizes. Because the one in physics, kind of questionable, but the one in chemistry, I feel actually is very well deserved. They did the AlphaFold protein folding, and that particular AI actually did have a lot of domain-specific, symbolic capabilities, which are beyond just sort of learning a large language, deep learning model. So, but yeah, to your question, Shri, adoption, we definitely have use cases where, which are very, very mature. We're seeing a lot of that. For example, just all of our Bloomberg terminal services and platforms are getting a lift in terms of just a natural language interface. So now, instead of sort of learning a complex platform like a Bloomberg query language, which has a very complex grammar, you can just ask your question in a natural language, and it will give you the answer. If you wanted it in a table format, it will produce a table format. Just ask with the right text. It will produce a chart for you. You can also code against the Bloomberg platform. You can use, we are innovating with the Microsoft GitHub Copilot project, where you can write, code just from prompting with text as well. And you don't have to really do the kind of a boilerplate coding yourself. You can get most of the coding out of the way. So, even Bloomberg charting, which is one of the big flagship products for Bloomberg, you don't need to sort of browse and search for charts anymore. You can directly take the charts you want in natural language and it will produce that for you. So adoption is really, across all our products and services, is getting a layer of AI or NLP in every single product. Going forward, though, we are looking into building sort of more integration with the trading strategy, construction and portfolio construction and portfolio optimization, also with machine learning and AI. That space, I think, requires a little more rigor, a little more domain expertise blended with the AI. So we are a bit careful with rolling that out because these things will directly impact our clients in big ways. Yeah, there's much more to come.
Absolutely. I remember like 18 years ago when I was at Citigroup, MBW Go was what I had to type in to get into the Muni with guardrails.
Right.
So you're saying that the Go button will be gone in the Bloomberg terminal?
Basically, yeah, you just start type, you open your Bloomberg terminal, you just, you can in theory just speak to it, but you will just type in your text what you want. It has obviously smart autocomplete options, but it will also generate recommendations for you. What are you looking for in terms of the either securities or functions or other APIs? So yeah.
Absolutely. And I just wanted to bring that up because I was trained as an engineer and I did my graduate studies in computer science and finance was not my background. When I went into Citigroup for the first time, there was so much context and domain expertise I had to gain before I could even operate. And that's one thing I see like a lot of students interested in getting into FinTech and wanting to do stuff. And typically when you see those demos, it would be like, okay, we're going to use this model to predict the stock price of this particular stock. And then you just feel like no one does this in the industry. And you got to do your tour of duty, at least to understand the context and domain, so you can start building solutions for the industry. And that's something I would really advise for students to, think about, like, do some internships, get into a company before you can think about solving problems in a company which you probably don't know anything about. That's the same thing goes with healthcare. These are very specific domains. If you do not have the experience and the expertise, just becoming a technologist and getting in there to solve problems will not get you very far, unless you understand it. Anish.
So there was an August 6th article at Mission Investments, which is how large hedge funds, AQR, Balyasny, Band are using AI. I think I can talk about that.
Okay.
And I think one thing that's very interesting is that the quants have always been using these sort of things, earlier versions of them. For example, quants would do sentiment for earnings calls. This would be more than a decade ago, just doing bag of words and things like that. And I think the recent developments make these technologies available to everyone. And so for example, in this article, they're mentioning that it's no longer just quants using it. The legal team is using it. The fundamental PMs are using it now. So the fundamental PMs parse calls from banks and all these financial statements and process that. Where quant could do that before anyway. So I think that I see this. The AI is now spreading across the organization. I don't think quants are going to get the big jump as much as other parts of the organization. In that same vein, I think that companies are figuring out how to use these things. And if you look at the research literature, CQH is Chicago Quantitative Alliance, and they have their meeting, I think, twice a year. And they have their academic papers, and they have their top 3 academic papers that they picked, and you can see them on their website. And the most recent 3 were all around LLMs. So LLMs interrogating financial statement data and SEC filings and calls like that. And the Q group is another one of these quant groups, and they have all their presentations online. And if you can see year by year, and the most recent meeting, they have presentations on how to use LLMs to process this unstructured data. So I feel like in the investment world, you're going to really see this. You see it on the quant side as everything, but you're really going to see it on the non-quant side. So every fundamental manager is going to be using these things.
Thank you, Anish. So Dee, you're being kind of, leading investments so far, Robinhood. So which is the next big one from the AI space, which is going to get the big bucks, if you will? But in general, can you talk about like the funding scene? I know we had this discussion about funding scene in 2021 and where we are, for later stage companies. I mean, we hear, OpenAI getting the funding, and we hear all these big players kind of, getting the big checks. But where do you see like startups kind of seeing beyond the seed stage and beyond kind of in terms of growth funding and in terms of latest return.
Yeah, sure, Sri. So, just for clarification, I mean, we don't invest capital ourselves, right? We are investment bankers. So we take entrepreneurs and we connect them to John and John, and that's basically, my job, right? So if somebody wants to raise $30 million Series A capital, and they want to hire a bank to basically introduce them to investors and structure the deal and do all the negotiations, that's kind of my role. So I'm not a participant in the sense that I don't invest my own capital, right? But it gives us a very unique vantage point to see what is happening at the one end in terms of startups that are coming into broadly the fintech space, what sectors are seeing a lot of activity, and frankly, on the other side, where's their investor appetite to be putting money in the space. Before we talk about AI, just giving you a sense of 2020 and 2021, now it seems like a long time back, but those were obviously glory years for venture capital funding money going into fintech, right? All aspects of fintech. 21 was just a banner year. And while the public markets in 24, right, all-time high this week again on the S&P, the funding in the fintech space compared to where things were in 21 is nowhere close to that. Right? If there was $100 spent in 2021 in fintech, not funds raised, but capital allocated to fintech companies, we are at about 60% of where we were in 2021, right? So public markets doing extremely well, all-time highs, private market funding in fintech still nowhere close. Further, the enormous amount of money is going on doubling down on late-stage unicorns, but relatively less money is going towards the long tail of fintech investing. This is across all of fintech, right? We'll talk about AI, which is an exceptional case. So if you look at a lot of the investments that went into 2020 and 2021, they were primarily on the front end, both on the retail and the institutional side, across business lines. So across payments, lending, capital markets, insurance, the four major activities in finance, a lot of the money went towards consumer-facing UI, UX, whether retail or institutional. There was also some money went into infrastructure. So for example, a lot of money went into blockchain infrastructure, across the board in 2020 and 2021. 24, I'll tell you firsthand, again, you see a lot of large deals being done. But in terms of number of deals or the capital invested in core fintech, like I said, is nowhere close. The exceptional case being in the AI space, right? And I fully think that 3 or 4 years down the line, we're going to look at a lot of funding that went in 2024 in the AI space that doesn't go sideways or goes down, in the sense that a lot of marginal stuff, and I'd love to hear both the investors' perspective here, marginal stuff is getting funded right now. I can see that on a daily basis, right? Investors come to us and say, well, don't present an opportunity to me unless there's an AI angle to that, before we've even begun to talk about it, right? So we are hosting our 16th FinTech Summit next week. This is our Rosenblatt conference. And of course, we have an AI panel, right? We've got 3 companies speaking on it. None of them are clients of mine, so I'm not pushing the agendas, but there's a company called Sardine that basically is in the fraud detection space. And there are 2 other companies that are quite relevant to this audience. One's called QuantUniversity, and a new company that frankly we don't know about at all, called SigTech, which is a London-based company that is making agents for investment management. It comes out of Brevin Howard. Alan Howard, the hedge fund manager, he owns a large piece of that. So I just mentioned those 3 examples of companies in that space. But coming back to what's happening in the AI space in terms of investing, I think the first thing that I would urge you to do is have some kind of a framework that you use to think about the AI space. And I'd love to have the panelist perspective. I'm not a technologist myself, but I've got a very rudimentary framework with the way I think about AI. You've got a horizontal AI infrastructure, the NVIDIA chips, semiconductor stuff, right? That doesn't industry agnostic. A lot of money going into that space. So infrastructure on which the entire AI stack is built. On top of that, you've got basically infrastructure that's vertical AI in finance, like platforms and infrastructure within the AI space that's financial services oriented. A lot of that is being developed by firms like Fidelity or Bloomberg, but also, startups trying to build some of that as well. And then on the top of that are the application layer that are vertical specific applications using AI in different areas of finance. For this audience today, maybe more capital markets, investment management, but of course, same activities happening in lending, in payments, all aspects of financial services. So that's a very simple, horizontal AI. You've got vertical platforms in financial services, and then user applications on which this is built, right? Now you can you can talk about, LLMs and all of that, which is it's another lens of looking at this whole stack. I've laid it down like a very neat pyramid. You can also look at it in a matrix form, right? So I think first thing is to look at what's your framework and the lens through which you look at the AI space. How do you segment players? So if somebody comes in at this conference and says, I'm building something in AI space, you've got a mental model where that particular technology and idea fits in the broader framework. So where we see a lot of money going in the last 12 months has been frankly in the horizontal AI space. I've got a team of analysts in my firm, nothing to do on the sell side, that cover semiconductors. We've been covering semiconductors for 15 years before semiconductors suddenly, a couple of years ago, became a hot word, right? In the past, when I joined my firm 6.5 years ago, my friends would joke saying, you guys got analysts that cover semiconductors? I mean, come on, you gotta join a firm that covered more sexy stuff. And suddenly, last 12 months, the Rosenblatt analysts are on TV talking about NVIDIA, right? And we had the highest stock target on NVIDIA. So a lot of activity in terms of investing, public market valuations in the horizontal core AI stuff. That's what you hear about, open AI kind of stuff. And I think where we see things moving right now in terms of late stage activity, more funds that are going is really more around the vertical AI applications. Two industries where this, that dwarf everything else is obviously healthcare, financial services, and then everything else is a long tail. Every single sector, every single industry is being stuff, including defense and the public sector as well. And then we're just beginning to have money coming in right now into vertical AI, right? And again, I'd love to hear an investor's perspective on that. So in vertical AI, that's where things get pretty interesting, right? How can you apply all of these new gadgets and technology that we have to solve meaningful problems, whether it's stock investing, both retail or institutional, right? The role of AI agents, right, which is this company called SigTech that I talked about, the London-based company out of Brevin Harvard, is trying to build AI agents for investment management. So those are sort of a couple of quick kind of high-level observations I have. I do have a pop quiz for the audience here. So the quiz was that one of my associates was looking at some numbers, and the question is basically if you can guess what private company this is, but one of the largest private firms in the market, smaller than Stripe, but on the IPO on-ramp. So they were in the news this year in the summertime, talking about the fact that they're using AI, and using AI, they basically cut staff from 6,500 people in 2022 to 3,800 this year. And they're going to go down to 2,000 people in a year's time. So any guesses what company we're talking about? Klarna? Absolutely. Yeah, it was Klarna. So Sebastian Sebastian, the CEO, announced that they're using basically much of that money that they're using, much of the cutback was on the marketing and sales side. But I thought that number was pretty sharp. Klarna is on the IPO on ramp. We think they might go public in second quarter of next year. BNP company out of Sweden, but that was a real company that went out there talking about the fact that the meaningful cost savings they had, with obviously, dire implications, obviously the staffing and all of that we can talk about, but that was just, real life applications of AI. Did want to mention, there's a very interesting report that a lot of research coming out in the space, but one that particularly I found interesting is a McKinsey report that came out about a month ago, which did a very good job talking about both wholesale banking and retail banking and the impact of AI in that space. And the impact being both in terms of the negative consequences, loss of staffing and all of that, but also the new value generated from AI. And one of the stats from that I thought was pretty interesting was that they said about $1 trillion of value would be generated in global banking. And again, I'm not talking about investment banking, we talk about corporate banking, retail banking, and wholesale banking. So $1 trillion of value unlocked, not from investment standpoint, but the value generated from AI in banking. But what I found further interesting, $1 trillion is a large number, so what does that really mean? But what was interesting was the areas in which much of that value will be created. And about 67 or 68% is in marketing and sales. About 35% was in risk. And then 14% each, 14% in HR and 8% in finance. So my point is, it doesn't matter, trillion, billion, whatever, large number. The point is about 65 to 68%, at least according to McKinsey, is the value that's gonna be generated in marketing and sales, at least at the time being, right? So that immediately gives you a sense of where a lot of that AI is gonna be applied in banking, that I'll have, well, you know, was a good number. But if I could actually, I'd love to hear the panel just talk a little bit about what are the framework that you think about when you think about AI? Like I laid out my framework, which is pretty rudimentary, but I'm sure there's a more sophisticated way of looking at what the AI stack is. But just a broad framework that might help the audience understand how you think about AI.
Just to add to that, I had a question, like, you know, how do startups think about building a moat? You know, considering that everybody wants to immediately build a layer over ChatGPT and have a working application. How do you think, you know, in terms of startup, like how do they build the moat? You know, with the framework, you know, and what kind of framework would you suggest?
What I'll do is, so I came with product placement, so I'm wearing my bike cleats. I recommend biking around, so it's product. Data Line, one of my portfolio companies to look at, but so Liquid AI, who hasn't heard of Liquid AI? Who's heard of Liquid AI? Yeah, so next week, I have 2,000 people that are emailing you guys as I'm sitting here, coming on Wednesday to Liquid AI's launch. Now, Liquid AI raised 47 million in a seed round and could have moved out to California and said, you know, we're gonna hang out in Silicon Valley, but they decided to stay here, and we're gonna do a launch of this new company, which is very differentiated and has aspirations to be one of the big 10 AI companies. And it's using less compute, it's explainable, it's what's after the large language model. It can go on an edge device. You can put your phone on airplane mode and do AI interactions. We're gonna try to build an ecosystem. You think of the transistor and all the things that were built around the transistor, you know, worked out pretty well for a lot of people in society. We think Liquid AI could be something like that. So I think building excitement, building community, and seeing Boston, not just as a region, but as a super region with New York. Man, I love what Mass Challenge did in terms of really changing how people saw startups a generation ago. And I think this type of technology we need to be open to. And you know, the other big 9 companies have a focus on how they're building their product, and I think we're coming at it from a different perspective. And I say we, because I've sort of dropped everything and trying to help them, you know, do a step function, go to the next level. So I don't know if that totally answers your question, but it's a way of thinking, you know, what's going on in my ecosystem that I might be able to benefit from or understand. So if any of you want to come to that launch, you're more than welcome to.
Well, so on the framework front, I think you covered it actually pretty well, and we think of it in pretty similar terms of kind of your horizontal, your vertical, and then I think increasingly these agents and models, which can themselves be a little bit horizontal, a little bit vertical, kind of existing in so just a more granular instantiation of, you know, the technology and the concept that could be very specific to a vertical or could be more broad. There's also a concept that I think that John and some of his colleagues at C10 Labs have come up with that is also an interesting take on it, which is this concept of sort of screen AI, that which takes place on a phone or a computer as an interaction as the UI to the human being versus a more dimensional, 3-dimensional kind of AI that extends out more into the physical world, interacting with physical items and changing. So this.
Let me just add to that. So physical AI. So right now, when you think of Sora, you can type in and make a video. I've tried it. Meta just came out with a tool that can make videos. At the end of the day, you're interacting with a screen. But physical AI, society hasn't gotten the memo, and you're going to totally bypass screens. And that AI is going to interact with the physical world. You know, people said, when is IoT coming? When's it going to happen? Well, you needed physical AI to create the way we can interact with the world. And as you think of robots and how you define robots, you know, who thinks robots are there are going to be more robots or less robots in the next 5 years? Yeah. I don't have a DeLorean, haven't been to the future, but I feel there's going to be more, and that's going to create all sorts of use cases. Uber took 16 years for Uber during the Web 2 era to people say, oh, wait a second, let's use the convergence of these technologies. There's going to be all sorts of convergence, and some of you, you know, with a Babson person might come up with a FinTech company that can harness these opportunities, and it takes imagination to figure out what to do here. So I really do like this idea of understanding what physical AI, what it affords, what are the opportunities, and how can someone in this room, on this webcast, be a leader around that. And I think that's gonna be the next kind of disrupting opportunity.
Yeah, so that's what I was hoping he was gonna say to begin with, so I started that and then prompted him back to share that with us, I appreciate. So, and then I think in terms of, I think your question, Sri, around, kind of defensive. Yeah, defensibility. So I think it's very similar to just regular startups, right? So a lot of it is the same stuff. It is, access to proprietary data, proprietary algorithms, sort of, smarter, better, faster. I think there's also always kind of who are your partners? How do you reach scale quickly? How do you capture market share? How do you become, how do you lock in your customers and sort of essentially teach them how to think about their own business and how to do their own jobs in a way that they can no longer live without you and the technology. So it's a lot of that stuff. I think also, again, in this space, coming back to kind of the ethical element, just having the explainability, especially in FinTech. I mean, if you're approving or rejecting mortgages, that's gonna come up. That as to like, why do certain classes of people not get approved consistently? How do you explain that rationale? And a lot of AI is still done as a kind of a black box. It isn't always easy to, there's millions of parameters and then billions of parameters. So it's not always easy to point to one thing. And we're gonna have to get to a point where you can say, all right, it breaks down to these following 4, roughly 5, 10 items, et cetera. So like those are also pretty important. But as with everything, a lot of it is just like speed to market, offering a valuable product, gaining market share, doing something valuable. I think that a lot of this, I'll throw out an interesting and maybe controversial, I don't know, but idea is that you have Elon Musk working on this like chip to connect with your brain, and this is one concept of sort of dimensional AI and interacting with the human. I'm not sure that works. I think all of our brains are wired very differently. I think that's super high risk and very unlikely to sort of pay off in the near term, although eventually it probably does. But I do think so really AI, digital technology can scale so much faster than the human brain. And I think that we're going to see explosive growth in technology that bypasses humans or that involves us as an adjacent element, but is doing an enormous amount of autonomous work together and interacting with physical items in the world with or without our engagement to it. And that is both scary and exciting. But I think you're going to see incredible amounts of innovation, like really mind-blowing, hard to imagine, where you're seeing in 1 year, the equivalent of 10 years worth of innovation, which was itself the equivalent of 100, the equivalent of 1,000, and then in a month, and then in a week, and then in a day, and just really like hard to keep up with. So that is also, again, why it comes down to being very careful about how we thoughtfully integrate ethics and good values, because these can become runaway processes that create enormous damage and problems for humanity, just as they can, which I think is more likely, that they can also create enormous benefits and value. I do think I'm an optimist. I do think it will be net positive for humanity. I am a techno optimist, but only because we have to take care of that, make sure that it's true, because otherwise it could spiral very negatively and create a lot of damage.
So just 2 points. So, go back to 2001, I was in this room running a nonprofit, lawyers with BlackBerries and students, and none of the nonprofit people had BlackBerries and were really jealous. I do think this AI adoption is going really fast, and segments of society aren't going to be left out if they see it as a tool. I also think there's going to be a premium on creativity and liberal arts education, the ethics to understand what to do with this. So that's not going to go out the window. And another point I can make. So Suno, who's heard of Suno? They're doing the music thing. And the question is, are some of these other plays going to be able to do music just as well while they go after that vertical? And I do think the rules are going to be rewritten and to watch that. And the financial sector can be at the forefront of some of these use cases. And often they're still using Windows NT or some old that was operating or Fortran, an operating joke. But I do think there's going to be opportunities where the financial sector can be the leader of using innovation. That could trickle to other aspects of society.
So I want to kind of, bring Harthorne and Anish's views, because, I think we are having this like discussion whenever I kind of, I'm in a university setting, when I see like, startups present, I'm seeing all these amazing ideas, right? Like, all the things you talked about, like about the possibility of changing the world. But then when I have my clients and they start talking about like the Windows NT and the Cobalts of the world and the firewall rules and what you can and cannot do, and fiduciary responsibility, which we have to think about whenever we bring products into the ecosystem, but also like the technical sophistication of the systems we currently have. So I see a lot of fintechs for bringing in all these innovative ideas, kind of, go through a valley of death because when they realize, oh, there is a regulatory barrier for us to get into larger companies. Oh, we cannot even deploy this into this enterprise unless we make all these investments to grow this whole thing. So I just wanted to kind of, understand from, both Tarun and Anish's perspective, how do you kind of bridge that gap? Because I know internally you're innovating, you're trying to bring in all these products, but how can the startups kind of bring in that energy and innovative mindset? And how do we, ensure that these products can actually make it to the enterprises, ultimately make it back to the customers? Because ultimately we're creating value for customers and not just creating barriers, right? So how do we make that happen from an enterprise?
Sure. I guess from the regulatory perspective, I think some of the responsibilities should go to the agencies which do regulations to actually sort of catalyze the research and innovation in the space from ground up. So they should be part of the process, from the startup to the experiments to the building of the technology, rather than just sort of come at the end of the game and see if it's appropriate or not. So whether it's a creation of more responsible AI method or more explainable AI, I think a lot of that is educational need that we need to be able to sort of make sure this is done ground up. And agencies should be sort of supporting open source initiatives, doing sort of more community activities to kind of bring academia into the mix, the startups into the mix, and getting them to build technologies in the right way to begin with, so that is more adaptable at the end of the day. There are many ways to kind of after you build a product, an AI product, to maybe make sure is doing the right thing by doing all kinds of checks and balances as well. There's a lot of research there to make sure it's not using any private data or any sort of wrong features in the mix as well. So there are ways to do it, but I think all the players need to come to it and be part of the process rather than sort of come at the end of the game.
So I guess on the investment management side, this article I mentioned, Balyasny has a privately hosted ChatGPT. And I think that's probably the way to go when you're going to these firms, is to have something where they know that the data is completely secure and it's not going to be used for training and it's not going to blow anything else up. So that's one side of it. The other side is, I think if you have something that is of use to the investment management industry, the first place to go is to a hedge fund. Because the hedge funds get paid, they get paid to take risks and they're more willing to take risks. And then as you go more and more traditional, then it's more regulated and they're also more risk averse. So I think a hedge fund would be the first place, then it could be some investment management firm, but the banks would be the very last because they are highly regulated and extremely risk averse.
Thank you. So Dee, looking at
Actually, if I could please offer a observation on that. So to be quite frank, it is very difficult to interact with large financial institutions to pitch your ideas to them, right? I mean, I see it, of course. As a banker, I live that. I see a lot of small startups want to engage large institutions. They think they've got something of value to offer, Fidelity or Bloomberg, but where do we even start, right? It's extremely difficult, particularly if you are at an earlier stage. One avenue that I would suggest, not easy to do, would be to talk to the principal strategic investment groups of the big financial institutions. So at Fidelity, for example, they've got many pockets of investment money across Fidelity. One's called F-Prime. They've got Avon, that used to be called Devonshire Investors. They've got a corporate development team run by Phil Santiempo. The job of these investment teams is basically to scout out interesting opportunities for investment, but of technology that can be utilized across the institution. So many times, if you try to engage with a business unit head of a big financial institution, it's very difficult to get in there. But if you try to approach and engage the investment teams, principal strategic investment teams, what are called corporate venture capital teams, they'll at least give you a hearing because they're interested in your idea. And they're the one central point. Their job is to make sure that they have canvassed and looked at what are the areas across the enterprise that you want to engage with external companies that are building product that could have a meaningful difference in our space. So if you go to somebody like F-Prime, they can say, you know what, we know across the investment management side, formerly FMR, what is Fidelity doing with the broker-dealer side, both retail and institutional, what's Tom Jessup doing with digital assets or brokerage, what are we doing in the clearing custody space, workplace investing, personal investing. I'm just taking Fidelity as one example. I can say, is that Eric?
Yeah.
So Wells Fargo, I was looking at the numbers. I mean, you guys are, you've got the largest investments, largest number and capital invested in the AI space, right? So we know the Wells Fargo team, and Wells Fargo is one example of a bank that's got many pockets of investment money across the organization. But those investment teams' job is to scout out ideas that are relevant for Wells Fargo, right? Of course, the vantage point might be purely thinking, how do we invest in your company? But at least they know across Wells Fargo, for example, what are potentially the AI use cases we are looking for externally. And then that's one point of access to the large institution. Otherwise, it's very difficult to go to the retail banking division of Wells Fargo or the institutional division, the wholesale banking division, and talk to them about, hey, I got an idea for you how my AI product can be applied in your group. That's a much harder way to approach large institutions. So sorry, you got it.
No worries. I mean, just in the interest of time, how about we take one audience question? Now, I have a whole list of questions. Maybe you can have one question, and then we'll do like a quick wrap up. Anybody has a question for the panel? Yes, please.
Do you think AI is taking away people's traditional / creative thinking when it comes to handling tasks? And do you think it is a benefit or a downside of integrating AI into these industries?
Please.
Anybody can take it.
Yeah, so I think it changes what the edge is. Okay. So you can imagine 100 years ago, if you're painting, or 150 years ago, just actually imitating what you see in front of you counts as a painting, right? But then that became easy, and now what qualifies as a painting has a lot more to it. And I think now there are these remarkable tools, and it just pushes the edge away. For example, I've read there's a guy, Ethan Mollick, who wrote this book on AI. And
Good friend, yeah.
Okay, so it's like
MIT, he didn't probably even get into Babson.
He get into Babson.
PhD at Sloan, at Penn now.
I saw him speak, a video of him speaking, and it was a great talk, and then he wrote this book, and I read the book, and I thought, this is just unbearable. And I put it in one of those lending libraries, the free libraries afterwards. And I think it was mostly written by AI, and so it was exhausting, it just tired out your brain. There's something to it, right? It's maybe it's good for a paragraph, but it exhausts you. And so I think these tools, they're remarkable tools that push the edge.
Or does it not work?
I think it's only for the recording.
Oh, okay, thank you.
Yeah. So those are my 2 cents.
You can't hear us in the back?
No.
We can hear 3 of you and 2 of you are.
Okay. Okay, thanks for telling us that.
So I know Ethan really well, and his son's a senior, and he and I talked about what it's like, watching his kid grow up and the world that he sees. And I think a lot of people who are very knowledgeable now think what's happening now wasn't going to happen for 90 years from now. If you asked them 5 years ago, and the world is changing so fast. So if you think of a tree, you have a bunch of roots ready for certain weather patterns. And this AI stuff, it's hitting us in a way that we just don't have the roots in our society to prepare for. But that doesn't mean it doesn't create tons of opportunity. And there may be a lot of jobs that are going to be eliminated because of AI, but it'll open up other opportunities, and people can use these as tools and be co-pilots for life. So, you could be a death spiral person or a techno optimist, and I choose to be a techno optimist. And I think it's entrepreneurs like you all that think about what are the opportunities to show, what this stuff, can do.
Okay, so I think we should start wrapping up. I have one question for you all, and it's a rapid fire question, so take 30 seconds on it. Put your crystal balls, I don't know what flavor you have, your Apple version or your Meta version or whatever you have. And think about 5 years from now. 5 years from now, think about something which is gonna be so super popular, but no one's talking about it today. In the AI space. What would that be? And I mean, both think from a usability perspective, but also life-changing perspective. What would that AI invention, and it need not be in the fintech space, any AI invention which you're not thinking about now, but maybe in the next 5 years, that's what everybody's gonna be about. I'm trying to see if we can get to the next chat GPT. Okay. So maybe D, you can start.
Well, I'm a recovering analyst, so my job, 15 years ago used to be projecting the future, but I don't kind of do that as much anymore. But I think what I find, I don't know if it'd be revolutionary if you don't think about it, and maybe I'm naive, I don't know the AI space maybe as well as some of you here. But this whole idea of like interacting with an agent as a human being, like, and this is the demo I saw of this company called SigTech that, again, I have nothing to do, but with the company right now, they're not pushing them in any way. But I saw a demo of their product, which is just being rolled out, called Magic. And it was just mind-blowing in the sense that they have these agents that they pop up and they say, okay, what's the impact of the US presidential elections on the US stock market, right? And bam, within like 30 seconds, it lays out, I mean, I saw the demo of this thing, that it lays out what the implications would be as an investor across 6 or 7 sectors, right? And I'm not talking about top 30 stocks to buy if Donald Trump gets elected or Kamala Harris gets elected. And this was like a level beyond that. And I was just blown off, saying, just saying, blown out of the water, just saying, that was amazing that it could basically take, now I don't know what the veracity of that is, or you haven't back tested what that means. And I'm sure, Bloomberg probably has the same kind of agents, but that idea that simply by popping in a question into an agent, you can get a response like that. And by the way, this product is not being offered to retail investors, it's for institutions. So I think that somewhere in there might be an explosive growth, that your ability to interact in natural language, ask a question as broad as impact of the US elections in the stock market and what should I buy, which might seem pretty obvious to other people. When I saw that in action, I was just blown away by that.
Thank you.
I guess I have something that's longer than 5 years, but John alluded to this, where I think that the AI is gonna start creating AI that's better than itself. And, you're getting the beginning of something like this right now.
So I'm actually excited about the healthcare and medicine space, and neuroscience, more than finance in that aspect. There's an emerging field of like neuro variables where you can attach devices monitoring the brain activity. So it's important not just for healthcare and especially mental health, which is very important these days, but also for even like learning what are the directly going from your thoughts to an action is now considered viable. So you don't even need to use natural language anymore. You directly you think of something and you can get your devices to act in these early ways. So I'm very excited about that intersection of neuroscience and medicine.
So I agree. I think in medicine and healthcare is one of the best and biggest opportunities, going to be massive changes. I would say on that sort of AI and FinTech kind of front, one of the best things you'll see is just mass and very precise customization, where AI understands you better than you understand yourself and can help you make investments that are aligned with your values, your health, your timelines, your needs, everything more than you understand and you are capable of doing. So that is a great opportunity. But on the healthcare space, like I'll say, we had in 2015 at Mass Challenge some researchers, innovators out of, I think, Johns Hopkins, that had already developed a continuous glucose monitor that is smaller than a grain of rice. You can inject it inside of your skin, so it doesn't float around your body. It sits in your skin, like on your hand, is solar powered, and then communicates your glucose levels via Bluetooth to your phone in order to tell you, so you have no pinpricks anymore, nothing like that. that already exists and works and is proven. It's not yet in the market because of just, it's got to go through trials and stuff. But you're going to see incredible medical technologies that are tiny innovations that you can swallow, that you can ingest or inject, that are going to improve our health landscape massively. And I think that is probably the most exciting and mind-blowing stuff that I see out there.
So the question is 5 years, what do you think? So you go back before Google, who remembers before Google? You know, like they had whole movies about like how to figure something out, but now you can just Google, and now Google's a verb. I do think there's gonna be a step change like this, and you're gonna have to ask people, are you an AI? You know, use blockchain to verify, am I really talking to a real person? And kind of what has been said, there's gonna be like TiVo for life. Some of you may not know what TiVo is, but you're gonna be able to search your whole experience through all the data that's being pulled together. I'll leave with 2 points. One of them relates a little bit to what John just said. One is own your own intelligence, own your own data. That I think there's gonna be a movement that you don't want these few AI companies to have all your data. And what does that mean? Because there are implications for that. And the other thing is the movie, The Graduate, it was plastics. Movie Fletch, great movie. It was ball bearings. I think 10 to the 9th is the future, 10 to the negative 9th, nano. But as we think about AI, I think building the new chips, building these medical devices that can go in your body, building things around sustainability that can help, whether it's materials or you know, we do have some real challenges on sustainability on this planet. Planet's gonna be fine. Species, you know, we're in trouble. I think 10 to the negative 9 plus AI, there's gonna be a lot of interesting opportunities. And some of you, the two of you could, you know, form the next Google company that buys Google and does a lot for society. So go for it.
Thank you so much. And, you know, healthcare, again, I'm seeing so many things happening. So if healthcare goes the way I'm anticipating it's gonna go with AI, we will definitely have a 2100 reunion of the panel.
So last thing I'll say, $100 trillion global economy, I think AI is gonna add 20 trillion in 5 years. So watch out.
Thank you so much. So we're gonna switch to the next. Thanks again, Dean. So we're gonna switch to the next part of the workshop, which is a master class.
Yeah.
Arden's gonna start with
Jay Werner at MIT.edu. If anyone wants to come to the liquid launch, I'll send you the exclusive invite right now.
we'll take a picture with the panel, and then we will immediately switch to the master class led by Arden.
We'd be gang signs. You know, there's a tree, it's absent from the same seed that I knew.
No section.
Oh, so yeah, you verified it. I didn't make that up. Can you take a photo?
It's Jay Warner at MIT.
Yeah, WE, yeah.
Okay, perfect. Do you want to start? Jay Warner.
So we'll have Arden present us, and then,
Yeah, Jay Werner.
One word? Yeah.
Oh, yeah, one of my students.
Pleasure to meet you. Nice to stay in I'm very old.
It's Wednesday from 10 to 1. Yeah, Jay Werner, WERNER at MIT.
Hey, John.
All to this stuff.
What are you doing?
So I would.
Were you in this room?
I was for like.
Yeah.
Happy to help.
No, I good guy.
I mean, we did all the ARBR.
Yeah. I was selling air, yeah.
Yeah. Do you have any time today, Monday, Tuesday?
I'm kind of.
I got into the decentralized AI.
Oh, what do you think of that?
I loved it.
Yeah.
I was like.
I like, data, there's like the world of.
Okay, so shall we get started for the masterclass? Now, you gotta open up your notebooks and pens or digital handouts, whatever you have, because we're gonna have an information-packed session. We're gonna have first Arun present for the first 15 to 20 minutes or so. He's gonna take a very formal approach to what kind of work is being done on the generative AI side of things, focused primarily on time series and sequential data. And I love his slides. I was actually reading through the slides in the morning, and Arun is going to present those slides, and all these slides will be shared. So if you are signed up, we will send you all the slides later. And then John's going to talk for the next 15 to 20 minutes, and then I'm going to conclude with my perspective. It's going to be pretty high level. For all this information, I'm going to give you like an easier to digest, version of what I see the world going with respect to generative AI. Okay, so it's going to be the next 60 to 70 minutes or so. So feel free to get your coffee and get ready. Aaron, please take it away. All right. Thank you. Yeah, just a second.
All right, let's get right into it. So yeah, this session is a little bit more technical, but I know the crowd is maybe a little bit mixed, so I will not dive into the bullet details, but try to give you a taste. So the theme behind this talk is the use of the generative AI foundation models, but for time series analysis. So as you know, large language models and foundation models are very popular, typically in the language setting. And so now I'll talk about how we're using that in the quantitative finance space. All right, wonderful. But before I do that, let me start with this slide, which is really about the two cultures of let's say statistical modeling. And this is not new, so it's kind of the debate that renews itself. It's kind of evergreen debate about the clash of two cultures, what we call data modeler on the left and algorithmic modeler on the right. It was Leo Bremen back in the early 90s, actually 30 years ago, who wrote a paper on that. So the guy on the left is basically what we call a statistician or an economist or like a physicist who is building a lot of assumptions about a model, has a lot of domain knowledge, and wants to sort of build a structured model to explain the data. And the person on the right is your algorithmic modeler, the machine learning or the CS person who is wants to do everything sort of data driven. So instead of building any assumptions or structure in the model, we just want to run the data directly from we want to run the model directly from the data itself. And can I get rid of the thing on the top or?
So yeah, so try to look.
Let me put it in the corner here. Okay. So yeah, but this is really the intersection I work in, the kind of marriage, or some people call it the war of quant finance with machine learning. And here's just a summary of the I lost the Now it should work. Yeah, there we are. So, how do we look at the salient differences between the two disciplines? In quant finance, it's really about, in the traditional quant finance space, lot about the domain expertise. You're basically building theoretical models and devising particular numerical methods, kind of almost working like a scientist or a physicist. In machine learning, you're only looking at the data and the patterns in the data, and you're letting the data speak. So that's one of the salient differences. Of course, the whole set of methods and technologies are very different. In quant finance, you're looking at very complex methods in stochastic calculus, numerical PDE solutions, things like that. Machine learning methods actually they look more complex, but the building blocks are very simple. Building blocks are just these simple what we call neurons, which are literally building this very simple mapping between input and output, but you chain them together in an arbitrary way to build the complex model. And as I said earlier, we have structure on the left, we have data-driven on the right. Clearly, for the traditional quant finance, we were able to work with very small data. We did back in the 90s or 20 years ago, we didn't have that much data available. So that was a reason why we used sort of traditional statistical methods and assumptions-based methods. So small data versus big data, of course, is a big difference. And that speaks to the parameters in the models as well. We'll define the traditional quant models using very parsimonious models, very specific parameters which meant or stood for very specific things that are going on in the models. But in machine learning, you have essentially a parameter per neuron or more. So and when you look at deep learning and these large language models, you're talking about billions and billions of parameters. So causality is actually an important aspect that we should strive to get in these models. The traditional models actually had causality embedded in the design because of the assumptions sort of made that my process would follow this structure. We were almost postulating or assuming the drivers that would explain the process in the data. But machine learning could actually, by its basic design, is not tuned to learn any causal inference. So it only works with correlations, and that actually makes for this big challenge, about interpretability. So machine learning models, this out of the box, tend to be less interpretable, and that's a big challenge we scientists have to solve for. And of course, computational cost is a big aspect as well. Machine learning models, in fact, are actually very expensive to train. So if you are doing full training of these models, it can be very expensive, but the inference is usually very fast. But typically, your quant models are always manageable. I mean, although you're using sometimes very complex numerical PDE techniques, but still, comparatively, you're good there. So to summarize, think of, the weather modeling or option pricing modeling, that's your typical quant models. And then in machine learning space, you're looking at image recognition or language models. And ultimately, in the quant finance space, the conclusion that you get out of this whole enterprise is about the model itself. So because your model has assumptions, could be wrong. Sorry.
I just asked for a clarification. Causality is embedded in the design. I know what causality is, but what do you mean by embedded in the design?
Because these models, you're basically assuming the drivers and their impact on the final output. So you're postulated a certain way the drivers interact with the output. So you know which ones are the independent variables, which ones are the dependent variables. So you build some assumptions about causality. In the machine learning models, there is nothing, it says nothing about causality. It just sort of learns a black box. Thank you. Yep. So the conclusions are about the model in one aspect and about the data in the machine learning. And finally, actually, just to be very fair, both can miss the truth because, they both have their own pros and cons, your modeling assumptions could be very wrong to begin with, so you could get it wrong. Machine learning, we are all very familiar with the cursor dimensionality and overfitting and how it fails to extrapolate very well. So they can both miss the truth. So, no matter which of the two sides you fall in, you need a lot of rigor, scientific rigor to actually do the right thing. Anyway, so coming back to time series models, obviously it's not a new field, it's been around for a long time. Back to 100 years ago when the first order regressive models came out. And then sort of starting on the neural networks and machine learning, where we started to apply machine learning models in the 50s. Then there was innovation around recurrent neural networks or LSTMs that was in the 90s, which sort of it jump started the new activity in the deep learning space. And more recently, starting from the CNNs were more popular initially in the computer vision space. So the convolution was applied more spatially, but then there was a temporal version of CNNs that came out, which was convolutions applied in the temporal space. And ultimately transformers came in and diffusion models, which are also getting applied, not just in large language models, but also to time series. And the reason we can do that, reason we can apply foundation models to time series is that, essentially these foundation models or large language models, they work with tokens. So in the language space, tokens are your words or parts of the words. And in the time series, it's essentially the value of the time series at every point is token. So you apply the same concept, but just to a time series. But one of the challenges of working with time series data is that the existing technology before the foundation models came in was training a model for a specific task. So for each data set or a task, you would have a separate machine learning model that was fine-tuned on that particular task. It didn't have the ability to generalize. So if you had a task about predicting the next value or forecasting the next value, let's say S&P 500 or the VIX, then if you're looking at a 5-minute forecast, you have one particular model. If you're looking at doing, for example, anomaly detection, you will train a completely new model. Similarly, if you had different horizon or different task, you will start from scratch basically. And this is where I think the foundation models have made a difference. In general, we want to be able to model all kinds of variability or diversity in the data. So we should be able to use a single model that can model univariate as well as multivariate data. All kinds of patterns in the missingness. So if you have data missing or seasonality aspects which are varying across data sets, that should be able to handle it. And the different horizons also should be able to handle by these models. And the idea behind these are really about using newer methods or newer innovations called anniversary. You have probably heard of attention in the models in the transfer space, the very famous paper that's really led to the research in foundation models with encoder decoder architecture and attention, which really jump-started the new LLM era, ChatGPT. In the similar vein, we have come up with the anivariate attention, where attention is not just on a single time series data, but also cross-sectionally across multiple time series. So you can attend to, time series of your, let's say, closest neighbors, or in terms of securities or time series as well, to generate multivariate models, and so on. This is probably won't be able to describe this in detail, but essentially on the left-hand side, you have the inputs which have, some of them have missing data. They're just lined up different time series in sort of one linear space there. And you have a bunch of data that's missing on the bottom left. And all of that gets encoded via a token embedding and then and the transformer to an embedding space that can help generate the results for the not just the missing data, but also forecasting for the next period. Exactly as a summary, what you are able to get is that whether you have data on time series like S&P 500 or VIX, or we have data from second measure at the bottom, which is our Bloomberg's retail transaction data. You can use data of various types of any modality and every different, whether it's different seasonality patterns or different missing data patterns. You use one single time series model that has been tuned to study all these data sets for any type of these tasks. So the task could be short horizon forecasting, long horizon, maybe just including missing values, anomaly detection, classification, and so forth. So it's very similar to the language model where you use a language model to do entity detection. The same model will give you, capability of doing question answering, summarization, search, and like chatting, interactive chatting, and so on. It's the same concept. Foundation models in time series are able to generalize to these different tasks. And one of the ways we achieve a better performance is obviously we need to retrain these foundation models using lots and lots of data. So we take a look at the data available around not just financial data, but also like climate data, temperatures, other electricity and other variables that we have seen in the real sets. And we combine that with Bloomberg proprietary data to come up with a sort of a proprietary pre-trained model for time series. And then there are two ways to use such a trained model. So once the model is trained, you can actually kind of, if you are feeling lucky, let's say, you can just use a zero shot task. So without actually giving it any examples of the task that you want to solve for, you can just sort of ask it to generate results on a particular new time series that the model has never seen. That's called zero shot generation, and you will get a certain performance. But in our experience, it always has to do a little bit of fine tuning. And this fine tuning does not mean that you have to change the model at all. You use your pre-trained single foundation model, but you just fine tune it for a particular task, very quickly at the end. So you essentially show it a few examples of the time series data that you are interested in inferencing, and it will learn the patterns of that data very quickly. It's similar to what we use in language models, like whether it's prompt engineering or retriever augmented design. A similar concepts in time series where you can ask it to sort of tune from the basic foundation model. All right, so I know we have little short of time, I know, but I'll take 5 more minutes to summarize what we are doing in terms of using these models for imputation in finance. That's actually a big problem. Imputation just means like looking at internal missing data, and in finance there's a lot of missing data, and there's a lot of types of missing data as well. We have data which is probably was never even recorded ever, right? So there's we still want to know what possibly that value could be, but there was no record of it. Sometimes we have companies that don't disclose a certain data point, but we want to be able to learn an estimate of it to be able to score that company. For example, greenhouse gas emissions of every company. There are many companies who are probably not doing very favorably in that space, so they don't want to disclose their data. But At Bloomberg, when we build our climate scoring schemes and ESG scoring schemes, we want to be able to compute that data to build a particular, scoring for that company. So we want to look at non-disclosed data, could be non-accessible, very expensive to obtain. And then even forecasting is sort of in the same vein. It's not known yet, it's in the future, but we want to implement it. And that's where we use distributional computation, where not only we give an estimate of the future value, but we also estimate the distribution around it, so you can get a sense of uncertainty embedded in the future estimate. And so on. So in general, prediction or imputation, like you can think of it in following ways. Imputation typically refers to the past data. Nowcasting is like estimating based on the current values of all the other indicators, what's the value of my target indicator. Forecasting is about the future, but we think of all these problems as just being of similar type. We use the same model or the same model family to be able to solve these problems. So generally, it's just an estimate, an estimate not just of the central value, but also distribution, which is very important. That's where the generative stuff comes in, because generative machine learning models are very good at calibrating the distribution of the values. And yeah, I guess these are sort of tongue-in-cheek points. These are still very, very hard to do these problems, even though they sound very simple. Niels Bohr said that it's very, prediction is very hard, especially if it's about the future. Of course, we know it's very, very difficult to be able to estimate values with all kinds of problems in terms of, overfitting and less data and so on and so forth. In general, we look at, a smoothing method, which is filling in the past values, nowcasting, forecasting, and also generation. And I'll give you a few use cases directly instead of going into detail. In climate risk, we use foundational models to estimate greenhouse gas emissions and water usage of companies. So by learning the historical disclosures by companies on their water usage and on their carbon emissions, and also combining it with industry-wide coverage of the different companies and their emissions and data, we can learn the distribution of target companies' future water use or future emissions using these generative machine learning techniques. We can also do prediction of facilities location. This is again in sort of the global climate ESG space, where there's a lot of talk about physical risk and transition risk in the climate space. Obviously, this refers to the physical risk, physical climate risk, where we need to know what kind of weather conditions or other possible risk conditions are there at different companies' facilities, whether it's their factories or their headquarters or their other kinds of pipelines and things like that. So we want to be able to impute the locations. So companies don't always disclose their locations, but we can impute it using our models. And finally, we can do imputation of geographical exposure. So if I want to learn based on geopolitical events, what's going on for certain companies in particular regions. For example, if you want to learn Nike's exposure to the Russia-Ukraine war, and Nike actually came out with the news saying that they are closing their stores in Russia. So how does it affect their bottom line? The company statements, if you look at the Nike's company statements, they actually have no information about their risk in Russia, or how many different stores they might have, or how much revenue they get from those countries. But that's where the quant modeling comes in, where we given the company's disclosures in other regions and their correlations to the target region of Russia or Ukraine, you can impute companies' exposure there. So and actually we compute it to be less than 1%. And this model actually can give you an estimate across the world for any given company, what their revenue exposures are, and not just the estimate, but also the full variant distribution. So it's very handy to sort of know, where the company actually operates in, what are the portfolio level geographical risks as well. So you can learn the profile of geographical risk for any given portfolio or index by just aggregating this up to any portfolio. And finally, I'll end with this one. This is actually about time series of illiquid instruments. So we have, 3 different asset prices here, and we are supposed to learn what the values are at the question mark point. So, asset 1 is very liquid, which has values at all the time points. Asset 2 and asset 3 are relatively less liquid, so we don't observe their values all the time. So just think in terms of the net risk challenge of house price estimation. How do we learn the values of asset prices or let's say house price relative to the other data that we see in the market? So there are other assets being traded in the market or other houses that were recently sold in the market. You can estimate for a given house what the prices should be. It's the same concept for assets. We see other bonds or other securities that are getting traded in the market. And we can use the information from there and correlations to imply what the value of the target instrument should be. Netflix actually also used a similar $1 million challenge where it's about users and their movie ratings. So they left a lot of holes in the movie ratings data, and people were supposed to estimate that. Again, it's actually the same model that is applied in these different settings, believe it or not. It's called collaborative filtering. And we use, again, this 2 different approaches there. One is, let's say, Quant approach, which is a Bayesian methodology where we are essentially filtering the data as the data comes in. For other assets, we can apply a filtering method to project the information from the new trade that happened in a different asset to the target asset. So, pictorially, you can see these 2 assets being traded in the market at different times. So you'll see a dot where the actual trade happens. So you'll see on the top, in the first 2 data points, the black asset is actually getting traded, and the red one is not getting traded. But clearly, the black asset, when it gets traded, its variance goes down to 0. So you have no uncertainty at every black point. The distribution collapses, but it also projects the information down to the red line. So you can see when the black asset traded at a particular point here, it also predicted a downward move for the red asset, but without collapsing the distribution. The distribution collapsed here, but this one did not, because there's still some residual uncertainty in the second asset, because it was not, this asset was not traded, the other asset was traded, but it can still project information gain on the second asset. So you can start to filter this data and still learn an estimate of the second asset price. So this is sort of the quant approach, and then there's a machine learning approach to this as well, which is building an implicit factor model with embeddings that correspond to the instruments. So here again, you lay out the data in a big matrix, Y, which is all the bonds in this case, and the time series on the columns. And the idea is to decompose that big matrix as a product of two matrices, F and X. So F is your instrument embeddings or factor loadings. So each column of F is a factor, and the value there is the loading of that factor for the target bond. And X are the time series of the factors themselves. And then idea is so how do we learn F and X from the Y optimally? And I think that's where you build possibly a neural network, and you define a loss function that minimizes the error between the product Fx and the Y, and also certain regularization constraints. So you have your desired properties in the F and the X matrices. So this is sort of a more global machine learning approach compared to the quant approach. Again, both are valid, both have their pros and cons, just, there's a lot of care needed to eventually, when you do it in practice, with the exact loss function design, exact neural network design, there's some things to balance out that you should be careful with. I guess, with that, I'll end my little talk here. And I want to thank again Shri for the opportunity. My pleasure to be here. Thank you so much.
A very information dense, slide deck. We will share the slides, and Arun is available through LinkedIn, so you can reach out to him.
Yeah, unfortunately, I can't stay here longer, but yeah, if you have any questions, please relate by Shri. I'll be happy to answer.
Thank you so much. That's great. So next we have John Werner, who's going to be talking about the AI ecosystem in Massachusetts. And take it away, John. I mean, every time I listen to you, I hear something about history. I hear something about the current stuff that you're working on, and I'd love to hear about like what happens.
You need to.
Yeah, you gotta put this.
Who's heard me before today? Who's never heard me? Who's an AI? A lot of AI. I'm a big fan of Shri, so,
John, it's always a pleasure to have you anytime. So, and just the microphone.
and how many people are online?
It's on LinkedIn Live, so I don't
Okay.
know.
Okay, so my name is John Warner. I'm a visiting lecturer at MIT. That's my email. I got 11 emails, last few minutes for an invite to the launch I just mentioned. I sent those out. That's my cell number. All right, so AI, the term's been around since 1955. Minsky and McCarthy wrote a paper to the government saying, hey, fund us, we're gonna do a conference with a bunch of people up at Dartmouth. And they called it AI, artificial intelligence, because they thought it sounded kind of scary and the government would fund them. I talked to Minsky about it. He said, yeah, I could have called it BI, but I thought AI sounded like there was some F there. The reason I show this map is that AI, it's been a concept. It was cybernetics. It's been around for a while. And this is a poster, and you see the neural nets. There was the AI winter. People had predicted all this stuff was going to happen, and AI was just around the corner, and it didn't come. But partly there wasn't the compute, there wasn't the large language models, you didn't have the infrastructure of the internet. And now we're here today. We're people are like, wow, we have this AI thing. Well, the reality is, in theory, we understood that today was coming. We just didn't have all the things in place for it. So this is a map. I actually think it's a few years old, of Kendall Square, and it shows all the life science, the energy, the tech startups. So there's a lot of activity right around MIT. Here's Killian Court. That's where they do the hacks. They put a car on the top or made it into the R2D2. But you can see there's a lot of activity going on. So a friend of mine, Joseph, he lives in New Jersey. He created a map of AI activity in Massachusetts. He said we're like at the forefront, and he created. This map's kind of hard to read, but it just shows that there's a lot of things going on. And I really like Massachusetts because top research institutions around AI, thriving tech, investor entrepreneur community. I consider myself part of that. Proximity to research, faculty, thought leadership, steady influx of global students eager to participate. I know Babson has a bunch of international students. High number of AI centers of excellence. So it could be corporates setting up shop like right across the street from universities. And then commercial adoptions of AI, availability of AI projects and AI jobs. So there's a confluence of factors going on, making this region, very special. So this is a map of Boston. Boston originally was a peninsula, 70 acres. This star, that's where, right out there, that's where the American Revolution started. They threw the T out of the boats. 250 years ago in a few months, this revolution started, that led to the United States. I would argue there's an AI revolution going on right now, and we could decide if we're couch potatoes and passively watching it happen, or we could, be innovators. Now, this guy is named William Barton Rogers, and he had gone to William and Mary, didn't graduate. He was teaching a class at UVA, and on the side, he got a gig to survey Virginia. There wasn't a West Virginia, it was just the whole state of Virginia. And they asked him to survey it because they wanted to build train tracks, they wanted to build factories, they wanted to build sanitation systems. The Industrial Revolution happened, and the state needed to know the topography. And this guy was so frustrated because he couldn't find talented people to do the surveying. There weren't enough in his proximity, in his network. So he said, you know what, I'm gonna go to the place where the most action is happening. And this Virginia guy came to Boston. Now, this is Copley Square. This is where two train trestles crossed over mudflats. This is Governor Andrews. When William Barton Rogers came to Boston, Governor Andrews had commissioned this 70 acres here to be filled in. And this became the Back Bay. And in making the Back Bay, eventually it got filled in. There was 3 buildings that were set aside, one for Agassiz, who was doing like Darwin type stuff, Museum of Science, another was for another thing, and then the second building is now a restoration hardware building right near Newbury Street. That was where William Barton Rogers convinced Governor Andrews, who had just filled this in, to say, hey, put a institute that can train people for the Industrial Revolution. That's MIT. MIT started as a way to train people. For 75 years, there was zero research going on at MIT. It was just how do we train people to do the surveying that he couldn't find people to do in Virginia. And the first 6 courses, course 6, these 2 have been flipped since today. So if you go up to someone and say, oh, are you course 2? They'd say, oh yeah, I'm mechanical engineering. But originally, that was the first one. They had 6 courses. It was the training schools, like a night school for people to get ready. And the week before the US Civil War, 72 students, 10 faculty, tuition 100. I think it's a little more today. 2 years later, 1,100 students. And this was created because Harvard was teaching the sciences very theoretically. They weren't using your hands, they weren't working with industry. And this little Boston Tech and MIT said, we're gonna do it differently. And here's some of the students' early days. There was a guy who was from Scotland, who lived in Canada for a bit, who hung out at Boston Tech in downtown Boston. He was non-technical. His girlfriend at the time was deaf. His mom was deaf. He would put his lips to the forehead and vibrate words. And he said, I want to hang out with some technical people. He got the patent for the telephone. And the first phone call was made from here to right near MIT, that's Watson. So at some point, MIT was bursting at the seams in downtown Boston. They said, let's move. And Chicago said, we'll take you. And Springfield, Mass said, oh, come out here. And even there was a piece of land next to what is now BU, said, oh, why don't you come here? But it was a guy named George Eastman, who was the Bill Gates of his time, who gave $2 million. It cost $750,000 to buy this mile strip of land. They put 20,000 pylons in the water. This guy who hired MIT talent and said, you guys are awesome, who said, I'll give you $2.5 million. Never been to MIT, was an MIT alum. And there weren't many alumni that had any money because the school had just started. He paid for this 22 buildings. It looks like one building, but it's actually 22 buildings. And all the different disciplines came out here, and there was all this bumping and connecting, creating a national institute to teach people to react to the Industrial Revolution. And these halls are where all this bumping and connecting happens. And when that got built, they started doing airplanes and, this is GPS, led to radar, key technology in World War II. This is that guy, Charles Draper, middle name Stark, who, did the instrumentation lab. His lab created the technology, to make sure we didn't miss the moon when we, did our NASA stuff. And then this is Minsky, that's my son, he's 21 now. That was a few years ago, but this Minsky, who coined the word AI in 1956, I have a sweater that says 1955, and I wear it like before AI, after AI, so that's kind of cool. But Minsky put this discipline in motion, and this is Danielle LaRousse that runs the largest lab at MIT, CSAIL, has 1,800 people, and it's the lab that Minsky had started. This is a picture of his living room. He had passed away, and we were celebrating him. And this is where CSAIL is, on this side of the building. There are actually 5 major labs doing AI. This one's LIDS, and there's a few others at MIT. So, who remembers I mentioned launching Liquid? Okay, so this is the advertisement for it, and these are Daniela, who runs that big lab. These are her students. This is the CEO, chief scientist. He's really clever, Matthias, and you know, this is all on the website, but they're doing remarkable things. And on September 30th, they published a blog post about how really special this is. Take a look at it. So on the 22nd, a week from Tuesday, I rented out the whole restaurant up here. We're gonna have a bunch of VIPs up there. The CEO of Shopify is coming, the number 2 at Deloitte, a lot of people that are very interested in this technology. I wanted to remind them subtly that this was MIT technology, so people up here can see MIT. And then the next day, this is Kresge Auditorium. I'm gonna have 2,000 people here get exposed to this. Think of Steve Jobs sharing the Macintosh computer. Who was not at that? Okay, yeah, so you have like, I missed it. Well, you don't have to miss this. This is Sam Altman. He was being interviewed a few months ago in Kresge Auditorium. There's Sam, there's Sally, the president. And this is Ramin, the CEO. He's gonna present on Wednesday all about this technology. And here's a scientist, this is Matthias. These are some of the other presenters. So if you want to go to the launch, right there's a QR code. Now, I'm just about full, but because I've spent the morning here, I decided, let me invite you guys. So do you guys know how QR codes, and this is the cheap one. This one has a dinosaur. There's no dinosaur branding with the event. I just didn't feel like paying for a QR code, and I knew to get you in, I needed a QR code. And no worries if you don't come. I don't get a commission if you come, but if you wanna meet interesting people, you know, part of the reason why William Barton Rogers moved up here was he, you know, was like, I'm not surrounded by people that are forward thinking and take advantage of this moment. And like the Industrial Revolution changed society, you know, I think AI is gonna change society, and you all and I are alive at a time, that dinosaur is not alive, at a time where we can harness it. I'm gonna go to the next slide, but did people who wanna go to this? Okay. All right, now Danielle LaRousse also just came out with a book, that's me. And this is the book. I'm hosting her on the 24th, a week from yesterday at MIT. So if you wanna go meet her, and hear about her book, it's on AI. It's actually riveting. I write a column for AI and for Forbes on AI and every day, and I've reviewed the book. You can take a look at that. So if you want to go to the book thing, this is another one. That again, dinosaur has nothing to do with the branding. Okay. So this is MIT today. So this is the corridor, the bumping and connecting. So while Harvard was teaching sciences with different buildings, where biology was here, chemistry was here, there's a lot of collaboration. And I think that's something we're gonna really need in AI, that if you just have the computer scientists in CSAIL just thinking, oh, you know, how do we do AI? And they're not interacting with other aspects of society, you know, we're missing opportunities. So think about how you all can be bridges among these different communities, whether it's here or anywhere else. So what have I done because of this moment? So I went to a bunch of TED conferences. My kids said, Dad, are you part of a cult? Who's this TED guy? Can we come? I said, it's cost prohibitive. And so I decided to start my own TED event. So I have the license for TEDx Boston and TEDx MIT, and I've produced 3,000 talks. And I got to the point where I was at 250,000 views for all those talks. I said, well, you know what, let me create a program about exponential technologies. What's the human dimension of it? And it's called Imagination Action. I do 3 of them a year. One is at Davos at the World Economic Forum, the second largest venue during the forum. It's a 56,000 square foot dome. And I program the stage, and I have all these touch screens, and I have these tech demos. During the World Economic Forum, I decide who comes in. So WEF is like 500 yards away, but I can put people on the list. $2,000 coach can fly from Boston to Zurich, take a 2-hour train ride for $100 to Davos in a quarter mile. If I put you on the list, you can be in here. And so I want to put the best and brightest stuff here. I think a lot of people are like in Boston, oh, we should just do things in Boston. No, let's go other places, show what we're doing and interact with other people and come back. And let's come back with friends there that we can also create bridges. So that's every January 22nd is this event. Then I do an event on the future of enterprise with AI. I don't say the future of AI, I say the future of enterprise with AI. I want AI the second thought. And I've been doing this for years. And the last, I had Sam Altman come to one of them. The last one I did, I had 5 concurrent things going on at once. I had 26 panels. This one's gonna be April 15th this year at MIT. And I had a room where people were just giving lightning talks for Forbes because of my relationship with Forbes. I produce a bunch of things that go on their video site. And then I had a room that the speakers could talk as long as they want, not time bounded. And I said, totally geek out. And that was for IEEE. Who knows what IEEE is? Okay, there are 400,000 IEEEers. If you don't know an IEEEer, you should go find them because those are great people to partner with. And so this was ones where I want people to get really into the weeds on the technology. And so 5 current things. This is imagination, action, exponential technology, what's a human dimension of it, all around AI. And then my 3rd event annually is in June, is with academics. And at all of these events, in addition to having speakers, so these are enterprise speakers, these are academics, I also curate a bunch of startups to pitch. And I have 60 startups pitch. These are their logos from 7 in the morning to 9 in the morning. Here are their logos. And that's kind of crazy. Startups don't get asked to pitch in the morning. You know, these are millennials or Gen Z. They don't even know what the morning is. But I said, no, you're going to go in the morning. And I don't rate them. I don't say, oh, you win a prize. Here's a sticker. I just give them a platform. And these people bring their entourages, they bring their energy, and you mix them with a bunch of academics, or you mix them with a bunch of, you know, Fortune 1000 enterprise companies, and you create these interesting communities, this convection current. And so I've been doing that 3 times a year. This is 1 year, this is another year, and I'm gonna keep doing it. And the events are free. I ask for people to share their fun fact about themselves. I tell people to introduce themselves to one another and share fun facts. But in terms of an ecosystem, I'm not giving you a paint by numbers how to start a company, but this is an ecosystem you could be part of because I want to create a community at this time. You know, we're all hyperly connected with our smartphones, but in some ways we're more disconnected because we're looking down, we're in these little echo chambers. You know, the most popular first name in the world is Mohammed. Who does not know a Mohammed? Okay, it's a derivation of Mohammed. It just tells you social economic groups we're connected with. I want to break that and change that a little bit. So these are all the startups that presented from 7 in the morning, and it's alpha. So you may want to change your name to a name that doesn't start with an A, so you get to go at the end. And then I would, you know, have their slides and people come for those. This is the Dome, been doing it since 2018. All the talks that I produce, I write articles on them. So if you want to go to my Forbes site, I have like 300 articles there. I'm going to write one based on an interview with Lex Friedman today. And then this is the Davos event I mentioned in the Dome. We have these headsets so you can tune in, write what they're gonna say. This is Randall Lane from Forbes. He's the head of, he created 30 Under 30, the chief content officer. And then these are those touch screens where we have demos. We had 12 demo stations. We had 72, you know, because every 90 minutes we would change. And then this is where that event is with the 5 things. We take portraits of all the speakers. We have a VIP session. That was Steve Case, founder of AOL, speaking. Here's the academics. Here is all the startups that presented from 7 in the morning. And here are their slides. We put in one deck so you could get exposed to stuff. And then during lunch, you know, as the academics speak, then at lunchtime, we put all the startups here. So again, it's like Country Mouse, City Mouse to bring in 2 communities together. And then this was a guy who's one of the founding members of Gemini, flew out. He talked to startups. And then this was the academic event. There's Yvonne House, Secretary of Economic Development. That's Will I Am. You know, so we had sort of a celebrity come. He's pretty cool and has some interesting ideas about owning your own data. And then this is the like sizzle reels of the 4 events. I also do a public-private one that I'm not going to go into. That's the CEO of Perplexity. So you get a sense. You know, it's like 60 startups. For that one, 27 speakers. So there was a 2-to-1 ratio. So if we played tug of war, the startups would win. Okay. So, and then CSAIL, this is Daniela who runs CSAIL, this is Sartosh who runs LIDS, that's McGovern Center across the street from their building, they do Mind. This is a new College of Computing, they each got 25 faculty that they got to add, $500 million Schwartzman College of Computing. And then I'm very active with Alexander Avamini, they teach a class in January just on deep learning, 13.7 million students have taken it. So what happened was 8 years ago, they looked at what Stanford was doing in terms of deep learning and said, we could do this better. Andrew, we could do it better. So they created their own class. It started just in this room, but now people take it all over the world. I guarantee you, like the 20,000 major players in AI, they probably started in this class. So if you haven't taken this class, you should take it and have a shared experience, or you may meet some people there that could be good for you. I also teach every Thursday a AI Venture Studio class. Lex Friedman was our first speaker last semester. We do a lot of socials. And at the end of the semester, we have 20 projects present, and some of them I think can become major initiatives. So you guys may want to get in the slipstream of some of them. Here are the gold, silver, and bronze. Everyone's a winner, but some are less winners than others. And then I run TEDx MIT. And during COVID, I got all 68 people that worked on the Perseverance rover to do pre-recorded because we didn't do a live event. And here are 3 Turing Prize winners. And me. So he created the relational database and thought it was a silly idea and just let it go. Oracle, $1 trillion industry. So if you see Mike Sobrecker, don't mention Oracle to him because he'll punch you in the nose because it got away. But these are good people to hang out with. And then I also do in November 16th and 17th an event called Planet Action around sustainable ideas that can have impact by the end of the decade. And so if you want to come to that, email me, I'll let you know. I like Paul English. He put $5 million down at UMass Boston and created an applied AI institute that students at UMass Boston, 3rd most diverse university in the country, to help nurses and other majors kind of figure out what they can do with AI. And then I own 15% of GAI Insights, which is like the Gartner of AI. We just had an event the other day. That's a good one. I'm one of the organizers of MIT AI in New York City that's happening the 26th. If anyone wants to go to that, I can get you discount tickets. And then Delta V is awesome, a program that happens at MIT, and there should be more cross-pollination between BAPS and MIT. And then I run a quarterly science dinner where I bring people together, and then once a year I do an AI dialogue, and these are 100 people I brought to it, but a way to kind of facilitate commentary. And then I'm almost done. This is the governor. She put together a great AI task force I'm helping with. I'm hosting their next meeting. And then this is a highlight reel on the 3 events. Who's found this interesting so far?
So many of the world's thought leaders, so many of the world's literal leaders.
Tim Berners-Lee.
These are folks who can make positive change, and we want to be part of that.
Here and imagination.
So that was the Davos one. This is the enterprise one.
Bringing their A game. Very inspiring and insightful presentations by all of them.
Head of research for Adobe.
Action was a fabulous event, full of energy, full of excitement, full of networking, many startups, fantastic speakers.
It's always great to be here. There are always big ideas, the cross sector, smart people, the goal of changing the world.
Who wants to come to this one? All right, I can let you in. Who wants to come to that one? All right, that's closer. One, please stop for you.
It's like ChatGPT, my Wikipedia, having a baby independent. That is perplexing.
To have 60 startups who are using AI in so many different ways to solve really important problems, that's what Massachusetts is about, and we're so excited to have them start here, stay here, expand here, and to support them.
This is incredibly special that we're at the official, unofficial event for MIT.
The energy, both in the space where the talks are and out here, in the space where people can interact with palpable. And it just speaks to the volume that people want to interact on this. People want to discuss this. People want to learn.
Power of them, their data, they will have their AI. Shouldn't your AI be your AI, because you're not just having access to some big corporation AI that really will find any company, religion, government, like, why would we want that? It is not because an entity is intelligent that it wants to dominate or that it is necessarily dangerous. We can solve problems, you can set the goals for it, and it will fulfill those goals. And the idea that somehow the system is going to come up with, its own goals.
Jan LeCun, Turing Prize winner, head of AI for Meta.
Perception.
Right, so for time, I'm just, that was my last slide. All right, who found that interesting? All right, what are 3 things you learned you didn't know? Anyone? 1, go. What you learned you didn't know? What's that? Yeah, the alumni of MIT that were living in Illinois say, hey, you know, it's too noisy. The horse and carriages are too noisy, in downtown Boston, right, when you come out here. Almost happened. It was ahead of where it is now. All right, 2, what you learned you didn't know?
Half of Boston's a landfill.
What's that?
Half of Boston's a landfill.
Yeah, that one road, that's where Paul Revere rode on a horse saying the British are coming or the redcoats are coming. And the point is that we've reinvented ourselves and MIT didn't exist, it now exists, it was a reaction to the Industrial Revolution. Now we have a revolution. And Babson is very entrepreneurial, thinking about how to seize these moments, and you guys shouldn't do it alone. Find ways to collaborate with these people. There are 200,000 MIT alumni. How many of you are working with an MIT alumni? All right, how many think that might be a good idea? All right, there's a 1 + 1 could equal 1,000,000. All right, what else do you learn you didn't know?
I mentor a judge at MIT, and I didn't know that all of this is going on. This is fantastic.
Yeah, all right, now you know. All right, Sri, is that what you wanted me to say, or does anyone else have something you want to do?
Thank you.
So we used to call that Silicon Valley is like the only space where all of the majority of the venture creation is happening, but like the Sainsbury's is also a major kind of hub for that as well.
Yeah, so before Silicon Valley, it was 128. Before 128, it was Detroit. And before Detroit, Buffalo almost was Detroit. Ford was gonna put his Ford plant in Buffalo, but it didn't happen. Before Detroit, it was St. Louis. So the next wave of innovation, Silicon Valley doesn't have a lot on it. And a lot of people in Silicon Valley are now moving to Austin and Miami. And while people are moving around, why don't we do some remarkable stuff? And this AI stuff is happening faster and faster than anyone could imagine. And, the sine wave, it's going like this. And who the hell knows what the future is gonna look like? And some of you may be scared shitless about that, but it also creates opportunity. We need leaders. Who's a leader? All right, well, I hope by the power vested in me that the stuff I'm doing, you plug into it and leverage these platforms. And if not, good luck. May the force be with you, live long and prosper.
Amazing presentation. I just wanted to bring in all the catalysts in the Boston ecosystem because it's the Boston FinTech Week. It's the Boston FinTech Week, and we have so many people coming outside from Boston to see what's happening in here. But there are so many innovators in here, so many things are happening within Boston. So we want to make sure you're aware of all these opportunities, and you just need to spend time. And I tell my students at Northeastern, if you are taking a class and just listening to the lectures and going and doing your homeworks, and then finishing up the class, it's nothing. I mean, there's so much happening outside the ecosystem, you gotta get engaged. And I send my students to hackathons happening all over the place and ask them to kind of go in and mingle and engage with the various startups which are out there. Otherwise, it's just going to be that you are in your own silo, in your own bubble. So you gotta mingle, you gotta figure out how you can actually figure out where your power is and where you get engaged. And thanks so much, John, really appreciate it. I think this is yours.
I'll sound an email.
Okay, so we're gonna have one more lecture, and this one's going to be a little on trying to understand where we go from here, right? We kind of saw when we did the panel, it was multiple perspectives on where they were seeing the opportunities are and where the issues are. And then when we saw Harthorne present about what are the various things you should be looking at when you think about building models, because Harthorne has a perspective from the financial industry, but you're also looking at this up. Okay. So Arun shared his perspective from industry on what's happening from a modeling perspective. what I'm going to do is just kind of wrap up the whole session with, let's say, the 15 to 20 minutes. I'm gonna keep it very fast and, try to get you excited about what you should be thinking about when you think about generative AI in general, okay? Some of it is probably you already heard in the last few days, but I also want to kind of summarize some of the thought processes which are happening in the financial industry. When we look at opportunities in the financial industry, how do you think about pursuing those opportunities, and where are the pockets which you should be thinking about and build your industry? So, primarily, I'm going to talk about these things. I know it's a lot, but don't worry. We'll skip those slides and we'll kind of make sure that you have the slides so that you can review them in leisure. And I didn't get a chance to formally introduce myself earlier. My name is Shri. I run QuantUniversity. I'm a Babson alum, and I've also taught at Babson. I'm a Northeastern alum, and I've been teaching at Northeastern for the past 10 years. And for the past 10 years, I've been running QuantUniversity. And we're working on another startup called QskillBoost.ai, and we have Shreyas and Mukul who are kind of building many of the aspects of the product. So we are not fully there yet to show you a full-fledged demo, but I'm going to give you some screenshots of what we are working on, so that you have an opportunity to kind of work with them. I'm also involved with the CFA and Premier and other institutions. I grew way back in my technology realm on and working on computer science related projects, but most of my career has been in financial services. So I kind of like blend out computer science plus finance aspects whenever I do my work and my projects. Okay, so for people who have been asking for slides, it's going to be on QU.academy. That's our knowledge share wherein all the slides from today's presentations will be available. And there's a code called Boston FinTech, all capitals. And that's where you can access all of the slides, including today's presentation. And if you have challenges, just send an email to info@qusandbox.com. I'll catch one of us after this presentation and we'll be happy to share this. Okay. Okay, so I want to kind of kick it off with my life with ChatGPT in 3 examples. We did a workshop at the CFA Boston Society last year. And we had a couple of RIAs in the room, and we were talking about like, what can you do with ChatGPT? I mean, we're not talking about like large scale systems. It's just a free version of ChatGPT. And how do you think about using ChatGPT? And we were looking at a simple use case where there's a potential pilot investor who wants to leverage our investment advisory services. This person has planned to retire in 10 years, has 2 kids who are ready to go to college in the next few years, has a chronic health situation, so needs to think about medical expenditure and stuff like that. And so you want to have a letter summarized for this person so that you can have them prepare for this meeting, so that you can have a productive meeting with this potential investor, right? So we asked the room, how much time would it take, like knowing all this information, to put together a nice formal letter and send this letter? They were all like, oh, it'll take a few hours, and I may have my assistant draft it out, and I may have to think about it. We basically put in like, okay, let's see if we take this information, just put this into ChatGPT and see what happens. And that was the letter which came up. And most of them in the room, and these are professionals who have spent 10, 15 years working in the space. So that's very close to the final version I would send out. I mean, this would be, it would take at least like half a day to generate a letter like this. And now it's just taking like a few seconds. I can even do it. I don't need an assistant to do it for me. I could just pop in information about my potential client. It's a personalized letter. And it's giving me so much more meaning when it comes to the meeting, because it shows potential client that you are prepared, you are personalizing it to their specific needs. And for them to have actionable steps on what they need to be prepared about when they come to this meeting. So these meetings are going to be more proactive. Another example, so I spoke at a conference in Chicago a few months ago, and it was a very specific conference for pension actuaries and people who are in the retirement system, and I have a lot of people I work with in the retirement systems, both in California and other places. And when we kind of talk about these issues and customizing things for audiences there, it becomes like so specific. And I wanted to highlight why they should be coming to this particular meeting. And I just took the conference website and I basically put the information in the conference website and I said, I'm going to be speaking there. And if you want to join us, come down to this conference. And Just basically giving this small prompt as it's called, 3 or 4 lines, generated that beautiful letter for me. Okay, this was the prompt, just to check. Just give a website link and then provide 3 reasons why you should be attending this conference. So it summarized the conference and also gave the insights on what actually. And then it's a meaningful letter. A lot of people would be appreciative of you taking the time to actually craft a letter for them. But for me, it was so simple to actually generate this. And you can automate it. You can actually build it into a pipeline and send it to all your clients and personally. So you can see when Dee was speaking about sales and marketing, these are the kinds of channels we are seeing, where you have personalization, customization, being specific to the needs of your audience, rather than kind of having a generic approach saying, here, first name, last name. And this is kind of what the approach you're going to see in the letters you're seeing. Right? The last one is like near and dear to my heart, being dad. I have a 6th grader who was preparing, she had a swim class. I took her to a swim class and we were driving back a Sunday evening. And then she said, oh, I have a test tomorrow, a science test tomorrow. I completely forgot about it. So we have a 45-minute drive back home. So, okay, so we're going to go home and it's close to dinner time. I'm not sure how much time we have to prepare for your quiz. So I asked her about it, what's the topic? And she was sitting in the back. Electromagnetic radiation. That's the topic. You can't have an easy conversation with a 6th grader without knowing the topics and what the teacher has taught her. And I'm driving, I gotta be focused on the road. So I use my power skills to ChatGPT. So I basically said, review the Massachusetts 6th grade syllabus and put together an audio lecture on electromagnetic radiation and summarize it for me. And it kind of put together this whole 6th grade syllabus, Massachusetts electromagnetic radiation topics, and it kind of narrated it. And after that narration happened, I said, like, create a quiz based on the topic you just created, and then ask a question one by one and give answer choices. And I started asking questions, and sitting in the back, my daughter was like answering questions, A, B, C, D, etc. And then within like half an hour, she had prepared for the test. Okay, and I was kind of just watching the interaction between an agent, which is kind of just taking basic information I gave, and kind of interacting with a 6th grader who's sitting at the back and answering questions prepared for it. So that's my life with ChatGPT, and that hadn't happened for many years. And in the last 2 years, we're seeing so many opportunities to work with this new phenomenon we're seeing called generative AI, right? So we have this whole area which is kind of flourishing, and everybody is kind of leveraging tools like ChatGPT to build out various workflows and pipelines and making your life better as an individual or for organizations as we build our products. So initially it started out with this whole notion of, okay, let's kind of see what fun stuff we can do with it. Let's create new emojis, let's create new articles, let's create poems, and let's create drafts and see what happens, right? So that was where we started, but now enterprises are kind of leveraging this and saying, okay, what enterprise tools can we build to make our life simple? Because whenever you work for any profit-making entity, it's all about like, how do I make things faster, better, cheaper, right? So you want to look at the enterprise value, look at return on investment, but also think about like, what value can you add to your customers? Earlier in the day, maybe many years ago, you would say bank works from 9 to 5, but more or less you are 24/7 banking today. And so right now you can do your banking 24/7, but if you still have a question, you may have to go to a branch or wait for customer service to be ready or be available to answer your questions. But that's all changing because of all these technologies. So we want to kind of understand this on what's actually happening, right? So this just did not come out of the blue. This did not just happen overnight with someone releasing a new tool and then it became viral. Right? So it's been happening for many years. Back in my grad school days, in fact, I'll show you a paper which I wrote like 20 years ago, and it has agent-based systems on it. Okay, I designed an agent-based systems 20 years ago, but I could not find a job which actually used it because we didn't have technology, we didn't have the intelligence to actually use it. So you can see this is the WIPO publication. You should actually look at some of these because this actually collects all the data about inventions which are happening in the world, the patent filings which are happening in the world. So give you an idea what amount of energy is kind of going to the space. So the graph you see on the left were artificial intelligence patent families and publications by year. And this was like a few years ago, till 2017, and you see it like, we didn't have much activity until here, but then suddenly it started skyrocketing. Periodical, the publications, scientific publications is what you see in here. And it was not just the scientific publications. People weren't just doing fun research and writing papers and things like that. They were actually filing patents, which basically meant that this is intellectual property we need to protect. This is going to generate business value for us. And they were generating patents and filing patents, and that this we are developing something new and innovative. And when you look at the areas where they were filing patents, you see things like neural net, support vector machines, rule-based learning, deep learning. So here are the topics where people were doing research and building patent portfolios with the companies. So fast forward, I pulled out the latest report, and there's a whole report on generative AI. And this report kind of talks about, like, how do you see this pyramid here? So on the left are the generative AI patent families, and this is like the generative AI patent publications. 2023 alone, there are close to 35,000 scientific publications on generative AI. Close to 15,000 patent filings on generative AI, right? And this is where we're seeing, and there's also a listing of all the companies, and you can see like the Tencent, Bing, Baidu, Chinese Academy of Sciences, IBM. These are the entities filing all these patents, right? And if you look at the report, you can see this whole geographical distribution of all the research institutions and companies which are actually doing research in generative AI, and finding new methodologies and building these systems. On the right, you see all these, patent families, split by application areas, and you see software and applications. Between 2014 and 2023, there were close to 30,000 published patents in the software area. Okay, published patents 2014 to 2023 in the software area, it has gone up from 371 to close to 8,000. I mean, like if you just look at the financial services area itself, you see a lot of stuff happening there, but many of these are cross-pollinations, right? So you can use some of the type of stuff which is there in software technology and you can use it in this. So fascinating things. And then you can see in the areas, the reason why I brought in, having had a panel of diverse areas and expertise is because on the institutional side, a lot of work is happening. And Bridgewater's recently published that they have a $2 billion fund, which is run primarily using just machine learning. $2 billion, right? And you will see a lot more of similar efforts wherein you are not just relying on human expertise, but the human experts are basically curating the technology stacks so that you can actually operationalize efforts like these. It was inconceivable even a few years ago, right? And on the other hand, there are a lot of efforts. Morgan Stanley was one of the first few which partnered with OpenAI. They have a whole research system which they have built internally, leveraging their proprietary data and proprietary resources. And then you have companies like Bloomberg, Arun spoke about it. They have their own GPT. And they're basically using it to power the experiences Arun was talking about, wherein you don't have to type in finance anymore. You can express what you want to search. You can express what you want to learn, and you will be able to get back that information, just by providing, plain old text. And then for people who are looking for opportunities, you're seeing this plethora of opportunities. All these major banks are hiring machine learning talent because that's where the opportunity is. That's where they see growth being. That's where they're seeing this opportunity to either cut costs or to basically engage with these people to create new revolutionary technologies. So Arun presented some aspects of how he sees this whole marriage, which we're talking about the quant and the technology. So I kind of have my perspective because this is the area I trained in, in my days as a quant. But nowadays, there's a cross-pollination of all the things I'm using, aspects of generative AI and chatbots and things like that, but merging it with my background and grounding of the fundamentals of finance. And many times we miss that whole picture that you've got to have this grounding because in a financial institution, many a times you are kind of working in this spectrum, optimization, fact commodities, et cetera. You can't replace this yet with just the new technology stack. You got to think about integration on having this notion of I need to understand these assets, but then apply them in specific settings. Okay? And then we talk about this pipeline, and this pipeline is kind of a constantly evolving pipeline, the machine learning pipeline. And initially people said, well, we figured out there are 8 boxes. Let's just put together a no-code, low-code solution and just make it into a template. Initially it worked. You could, do like, simple problems like who survived and who died in the Titanic, the candle examples you typically see. But now you're seeing so many aspects of it because this whole notion of model, building, selection, tuning, it's all gone. If there's a large language model which is being hosted, all you have is an API key. You need to be able to send your prompts, you engineer your prompts, which is basically today's version of feature engineering, is to send the appropriate prompts so that you get back the responses you want, and then merge it with other aspects, structured and unstructured data sources. Right? So I just kind of listed like 10 use cases just to kind of get you thinking on the kinds of things which are happening in the financial services world. Obviously, these are not the only ones, but the value, as we call it, is happening in these areas. So I'm going to just quickly summarize what this is, so that it gives you an opportunity to kind of delve deeper into it. The first one is summarization, which I gave you an example earlier. A lot of summarization. You're probably seeing Notebook LLM and even ChatGPT. You can just upload a document and get a quick summary out of it. That's fabulous. Because I don't have time to read 75-page reports. If I'm preparing for a meeting and I need to get give me a 10 bullet point summary of what I'm reading, it's something I want to be able to get information as quick as possible. So that's where a lot of work is going on in terms of summarization. Rather than giving all the information to you at once, think about it as explore experience in Excel, where I just want to explore this information. Is this really worthy of my research and my time to read through this whole report to garner certain insights from it, or just get a quick summary and then process it from there. Another one is querying information. When you think about search, right now we are seeing this one-step search, when you go to Google saying, ask a question, hopefully get an answer, right? Or get relevant bits of information which I have to individually dig through to be able to query and get information I want, right? But that's changing, wherein you can actually ask questions where there is information in multiple places, and I want a consolidated answer. I want my engine to go in and search through multiple sources, reason, put all this information together, and then kind of get me the information I'm looking for. It could be a multi-hop, an ensemble approach, or whatever it could be, right? So that's another aspect which is happening. Outline generation. Many times you just need to be able to get started. Right? If I wanted to create a presentation, if I wanted to pitch something to a client, if I wanted to kind of summarize certain information I've already processed, but I need some kind of a quick outline. The first drafts is always the hardest. Many times when you create a presentation, it's just getting the thought process together and getting started is the hard part. So that is much simpler with some of these tools where you could potentially say, hey, I wrote a report on this particular topic. I already have an outline. Get me started on this new topic so that I can optimize my time and focus on specific things. Oh, by the way, here are the things I need you to focus on and provide bits and pieces of information and get the first draft going. There's a lot of work going on to get your first draft happening. It's positive and negative because you see this whole proliferation of AI generated content out there. Many of them are so generic and may not make sense, but you also have information which is being generated on your end, which probably would not have happened if you did not put in the effort to actually create something new. Right? So there is the pros and cons. You gotta work with it, see what makes sense and to what level you want to have these automation happen. Personalized news. This is huge. I mean, I have had many students of mine actually create systems as a part of the course I'm teaching at Northeastern. But back in the day, this is 2007, 2008 time frame. I was at City and I was in the Munis tech department where we were basically building tools for municipal bond traders. And primarily we were searching through information from various sources. And every day we had a schedule. 7 o'clock, one of us would write the morning newsletter, which meant that I would come in the morning, make my pot of coffee 6:30 in the morning, sit down, go through the Bloomberg terminal, go through a bunch of news resources, summarize the information and create a newsletter which would be shipped out to close to 400 traders and analysts throughout the country to basically alert them about the information regarding fixed income and municipal bonds for that particular day. Okay, and it took quite a bit of effort to put that whole letter together, 2 to 3 hours of an analyst's time, and I had to do it on a daily basis, but it was not personalized, right? It was just generic information, we had templatized and then made it available. But with the systems like what we have in here, we basically have the ability to kind of, get everything going in a very few clicks of button, if you will. And then there's a lot of work going on in AI fraud detection. There are a lot of, like I'll share the slides with you. A lot of personalization tools, the consumer front are getting AI layers built into it, which are great opportunities. Chatbots is another big one. Obviously, you're all experiencing it with customer service, which you can easily, leverage. And then a lot of, this is actually a big one, like, using GitHub Copilots for creating code and enhancing the productivity of developers. Rather than thinking of, oh, developers will be gone, it's the perspective like, I don't really need 3 developers to be building this. I can have 1 developer and a co-pilot to be able to build more or less the same thing, rather than having like 2 or 3 developers building the same thing. So those are some of the opportunities. And then I put in RPA++ because many people invested significantly in what is called as RPA, or robotic process automation. But now with intelligence built over it, to be much more dynamic. There's a lot of automation which goes along with that. And then finally, this whole area of retrieval augmented generation, which is a methodology for leveraging proprietary information and then using an LLM to curate your answers. I think that's like one of the most popular use cases. So if you search for a RAG, everybody is thinking about like, optimizing RAG or putting a RAG into their systems so that they can leverage their proprietary information. And rather than having an LLM do all the sifting for them, they can use vector databases and other aspects to build it up. Okay, so those are some of the use cases. But I also wanted to touch a little bit about the risks and challenges because obviously we don't have everything solved. We are seeing new challenges come up, both on the security front. There are organizations looking at, well, we are seeing hallucinations, accuracy is a problem. There are all these issues which you could potentially game the system to either get the answers you want or maybe give you answers which you should not be seeing. So all these frameworks coming up, but again, I would say this is still really new. We don't have solved problems yet. It's not something where we could say, hey, you can just throw in this product at the end, lifeguard 24 or whatever we want to put at the end, and we'll be able to get rid of this problem. You have to incorporate it in the design. As you're building products, you have to make sure that all these risks are also addressed. So we ran a roundtable with another startup called Truera last year, and that got acquired by Snowflake last year, and we invited 15 of the largest financial companies in New York to actually do a roundtable. And that's what we heard. They're all concerned about hallucinations and accuracy. So they're making it more internal facing for the applications rather than external facing applications. And that's changing a little bit this year, but you still see a lot of concerns in the financial industry. So when you're building products for the financial industry, you've got to make sure that you have the right kinds of guardrails set up for all your products. Okay, so I want to kind of end my talk with one last aspect which everybody's talking about, which is the agentic revolution. Okay, so everybody has this notion of, well, we're going to build faster, better, cheaper. How do we use multimodal models? How do you use the models so that we can optimize on the performance, but also reduce the hallucination, put in guardrails, etc. But there's a lot of talk about agentic revolution and agent-based systems of things. Why is that so? I just want to give you a little bit of context on my journey with agent-based systems over time so that I can connect the dots. 20 years ago, when I was doing graduate research on distributed information access, we used mobile agents. We built out a framework wherein we had all these data sources, and then we had these function agents, as we call it, which was specialized to do siloed tasks. And then we had these user agents, which are personalized agents for specific tasks. Okay? And then we had a mapping function with a lookup table where we would say, if a user wants this, it will delegate it to a particular function task, and it will leverage some proprietary information, do certain things, and then consolidate the answers and really find it. Right? So it was pretty conceptual, we built some basic prototypes, but it was not intelligent enough to be deployed. I mean, it was there, I mean, this was published in 2004, 20 years ago. But this was kind of the framework I built like 20 years ago for my graduate thesis, right? And fast forward, like, no one gave me a job to build that system in the enterprise because it was, practically useless, theoretically good, but practically useless. But Citi gave me an opportunity saying, we are building trading systems, but there was a business context. The business context was, we don't want the street to know the price of the assets we are buying or selling. So what we'll do is we'll create an internal auction so that human traders and machine traders can actually bid on particular price. And whoever wins the prize, that prize will go on those trades. So we built a whole agentic system internally so that we can create an internal auction, leveraging information from Bloomberg. That's where the MBW Go was coming in and starting around. When you were using Bloomberg as a data source, get the data from Bloomberg, run an internal auction, figure out the best price, then send that price to the street. So that was like the system, agent-based system we built at Citi, and this was 2006, 2008. Nothing intelligent, but workflow automation so that you can actually automate the whole process, right? And then I went to a search company called Indeka, Raj here, so he was a colleague of mine at Indeka. And there, the whole notion of distributed information access was, we wanted to create an index which had to be in memory. But we could not put a lot of stuff in memory because of the restrictions of how much you could put in memory. So we created these distributed indices wherein every system had its own index, and then we basically connected all of them. So depending on where the search came, you could go into these systems and get that information. It was primarily an access problem, but we wanted to make sure that the access was generated in a much faster pace so that you can, cater to the information request at that point in time. Right? So fast forward today, everybody's talking about agent-based system. It's new. We gotta like build an agent-based system. But the surprising aspect of today is like there's a lot of infrastructure, there's a lot of stuff which has happened over many years, which can make things possible. But today, the beauty is we are adding an intelligence layer here, which makes life much, much different than what we had as problems in the past. And I share a paper in here which talks about like the various architectures and how agents could structure various things. The nice thing about this is like we are seeing practical problems with today's day and age, technology problems and seeing how we can solve it. So this is just an example here from this paper. It talks about like, okay, so if you have a question, how many rooms in the hotel that is home to the Cirque du Soleil show Mr. It gives you a random answer, 2664, because we're using generative AI, maybe store and it was trained last year to give you an answer. Maybe not the current answer, it may not be the valid answer, right? So that's wrong. So if you use this design pattern called chain of thought, which is to say, hey, when I get you a problem, split it into like a chain of thought process. How would a human think? And then answer the question. So then, it stops and thinks, and then it says, okay, but Treasure Island has 2885 rooms, so the answer is 2008, right? So that's like the chain of thought process, which is basically reason only for the question. Then there is act only process wherein you say, well, this is how I would do it. I would search, I would do a lookup, and then I would do a search. But with this series of actions it takes, it could not end up with an answer. So it ends up saying, I don't know, can't get an answer. So there's a design pattern called React, which you will see in agent-based architecture in our paper. So they kind of goes with this notion of react, reason and act. Then there's a thought, there's an action, there's an observation, there's a thought, there's an action, and there's an observation, and it consolidates all these processes and then comes up with the right answer, 2001. So this is basically a series of steps which are taken to answer a particular question, which is typically what an agent-based system will do. To take not only the access to information, but also build in these layers so that we can actually get to the information we really need. Right? I just want to share these examples so that you know what we're talking about. But on the infrastructure side, because we have so much compute, we have all these design patterns on the cloud. So companies like, this is like, I put it from Microsoft. So they're basically creating like, hey, you know what, you will need structured data sources, or you will need this kind of compute, you will need all these interactions. And we will give you the infrastructure so you can actually build out an agentic architecture and build out. So building systems is not gonna be difficult for you, because you have, applications, you can try it on cloud, you can try it on different infrastructures, see what actually works, and then apply them to your operating systems. So, no, just a minute, let's finish. And then, at, Q-Skill Bridge, which is what we're building, so we can show you a demo and we can get this sort of thing, in a second. So what we are trying to do is basically, learning, when I was at MathWorks and other places, it would take 40 hours to generate 1 hour of training content. So the workshops we do takes close to 40 hours for 1 hour of content. So if I'm doing an 8-week workshop, so it basically take, an 8-hour workshop, or day's workshop, I have to spend 8 weeks to actually prepare for a 1-day workshop, right? But the information changing so fast, it's such a major thing to getting exposed to build out the content. So we are leveraging AI, and we are building out the infrastructure to create new courses, leveraging, and we use our, human curation to make sure that it's robust and, it's all, well put together. But we're also looking at other applications we can use with the engine we are creating. And one of the applications is this notion of skill bridging, which is to say, hey, I'm applying for a job, and I found a job which actually is something which I would really love to apply for, but do I have the skills? And our system will basically leverage your background, your experience, your resume and everything, and then it will look at what the job requires and then map it and say, you're 60% there. You don't have those skills for the 40% thing. But it'll kind of map those skills for you. And then what we have done is we basically take the skills which you don't have and then create a curriculum for you on what you should be studying so that you'll be the right fit for that particular job. And then we will create a course for you with slides, audio, assessment, so that you're completely prepared for whatever the deltas you have for a particular position. And then we're kind of scaling that up to like, okay, so you can do it for individual jobs, but you can also do it for your enterprise. Let's say there's a promotion waiting for you in your company and your boss says, you know what, if you learned agile project management for this, you'd be really fit for this particular position. So rather than saying, okay, let me go and take a course on agile project management, this will help you kind of get to that with the project matching aspect of learning and customize them to your specific needs. Right? So we are leveraging a lot of agentic architectures, we're leveraging a lot of stuff I told you about, summarization, querying and everything to build out this architecture and art. The question for you is, what are you going to be building with AI agents? Okay. I'll stop at that, and if you're interested in any of our courses, it's all on our QuantUniversity website. And thank you for your time and attention. I hope this workshop was helpful. And again, thanks to Babson and thanks to the FinTech Sandbox for hosting this whole event together. And looking forward to connecting with you online and answering any questions you have. Thank you.
Great program.
Thank you. So you had a question?
Oh, mine is.